Hello, everyone. Good morning. Welcome to my imperfections. But thank you for being here. First, in what is a breakthrough, I think it's amazing. It says a lot about you guys. A lot about you guys. Do you know where we are? I think I can say without equivocation that you collectively are the largest, not only the largest institutional holder of Railtown collectively, you collectively are by far the largest single holder of Railtown. That won't last forever, but we own 15 million shares of Railtown. 15,018,582 shares. I'm sure it's an exact count, but we own 15 million shares. And I didn't count that slow train's 250,000. I didn't believe him. And there's others I haven't counted. 15,018,582. If you stick together and you don't get swept away in some story, you together, including me, we're going to be very powerful in this story. And we won't just be powerful in this story. We'll have access. I'm sure there's many of you out there that can help on that, but I know I can. We'll have access in the future to great transactions. So I just got to tell you, I'm proud of each and every one of you. 15 million shares of Railtown. Incredible. Okay. I have indefinitely scheduled, a discussion coming up with the company. That shows your power already. Now, I don't know how it's going to, how it's going to translate. I assume it will translate into my being able to have an interview for you. It's not about me. With the CEO or with both the CEO and the CTO, with the two guys or just one. Either way, it's going to be great. And I think it's going to be sooner than you think. I hope I'm ready. I hope I don't get nervous. So that's great news. I think this is a fantastic day. Now, last night or this morning, the company, do you remember I said there were things going to start happening? One of them we discussed was there'd be a new presentation from the company. Well, guess what? There is one. You can go to their website and find it. I printed it out, and we're going to go over it now. Not that I understand everything about it. But it's exciting. So since the deadline of the AIP transaction Friday, we've had a TELUS announcement, which I don't know how complete that was because it didn't really say a lot. When you see this presentation, you're going to see what I mean. So maybe, just maybe, there'll be more over the next weeks from that source. Who knows? We have this out, which we're going to go through. And we had the excellent interview by Rebecca Kurzweil with Dr. Tom Core. 3 days, 3 positives. Today I don't see anything. The day's not over, but it would have been great if there'd been like another revenue deal or you know, something. But it's fine. It's good. Things are going. All right. So here, let's just go through this. This is the Railtown investor presentation, November 2025. Railtown. Roadhouse. They're building the 51st state, a Canadian AI development ecosystem. Railtown. Roadhouse. They list, I had this printed out in black and white because frankly it was cheaper. It would have been 60 cents a page, and in color, in black and white, it was 20 cents a page. Call me cheap. But you'll notice here, I'll just highlight a couple of things that I think matter. The others matter too, but they list their Railtown partners, and of course you've got Microsoft 3 times. Then you've got NVIDIA. You've got TELUS now. And you've got AMD. These are tremendous partners. Of course, you've got Amy, Mila, Northeastern University, University of British Columbia, and you've got digital. And these are important too for expertise and non-dilutive financing. But here I think you pretty much see your potential buyers of the company. And that's not a limited one. All right, so these are the pages as they go, so I'm going to read them to you. I have no idea if I'm going to understand it, but we'll go through it. The mission statement. Railtown AI Technologies, Inc. is dedicated to transforming the way agentic lead software is built, deployed, and scaled by delivering intelligent AI frameworks as well as observability solutions that solve problems before they happen. That's a winner. Accelerate innovation. That's a winner. And strengthen the Canadian ecosystem through our 5 integrated divisions. We provide developers, enterprises, and AI companies with the tools, infrastructure, and marketplace access they need to thrive in an AI-driven world. So our divisions and strategic value, obviously printed in, I think, a light blue, so you can't quite see it. Number one, software as a solution services, products, Conductor DPE, agent manager and engineering platform, and Conductor RCA, root cause agent. So the value proposition, the Conductor DPE powers AI development teams with real-time insights into AI agent runtime, reasoning, costs, velocity, error tracking, root cause analysis, and deployment monitoring. Conductor RCA is fully integrated inside Microsoft's Visual Studio, delivering instant local level analysis of errors with suggested fixes, reducing debugging time dramatically. It can help in marriages if you're having problems. Somebody's bugging you. Strategic position. Positioned as the essential productivity layer for modern AI workflows, improving time to market, code quality, and operational efficiency. Okay, so that's the first division. Second division is the agent frameworks division. The products are Conductor ADK, Agent Developer Kit, and Conductor RAG. Universal Retrieval and Ingestion Engine. So the value proposition of this division: empower developers to build and deploy complex real-time AI agents with robust retrieval and ingestion capabilities. Also, streamlined integration with Conductor AI Cloud for deployment. Strategic position: establishes Railtown as a platform provider in the agent economy, enabling next generation AI-powered applications. That is that page. Number three, division number three, Conductor AI Cloud Compute Services. Value proposition: cost effective, developer friendly, cost-effective, developer-friendly cloud hosting, optimized for deploying AI agents built with our frameworks. Built-in data sovereignty safeguards, crucial for regulated industries and Canadian businesses. Strategic position: differentiates Railtown from hyperscalers by providing targeted developer-focused cloud infrastructure with competitive pricing and sovereignty compliance. 4, open source project, Railtracks ADK. Value proposition. Railtracks ADK is a student/community version of our enterprise conductor ADK designed for Canadian universities. Supports AI education, fosters early adoption, and seeds a future developer base skilled in Railtown tools. Strategic position. Positions Railtown as a foundational contributor to Canada's AI ecosystem, creating a talent pipeline and strengthening our brand among future industry leaders. 5, AI partnerships. Canadian AI affiliate marketplace. Value proposition. A curated marketplace of hundreds of Canadian AI companies provides affiliates with access to all Railtown products, frameworks, and cloud services, while enabling affiliates to showcase and sell their own solutions. Strategic position. Creates a network effect that drives product adoption, expands market reach, and builds the definitive Canadian AI business hub. Strategic advantage. By integrating productivity tools, agent creation frameworks, specialized AI cloud infrastructure, open source ecosystem support, and a nationwide AI marketplace, Railtown AI Technologies occupies a unique position. We are not just selling products. We are building the infrastructure, community, and market channels for a thriving AI-powered future. This integrated model creates exceptional potential for accelerated revenue growth from premium SaaS services to high-margin cloud and compute channels. By tightly coupling developer tools, agent frameworks, cloud infrastructure, and marketplace access, we open multiple recurring revenue streams that scale together. Agents that scale together live together in peace and harmony. All right, I didn't show you that page. Here's that page. Okay. The 5 divisions, or I don't know, subsidiaries, you maybe, are shown on this page. You've got Railtown AI Technologies. You've got Conductor here, Conductor there, Conductor everywhere, and Railtracks and AI Partnership. This is their organizational structure. And again, you can see this on their website. So this is called, I couldn't read it backwards, but this is referred to as services, frameworks, AI compute, open source, and marketplace. All my highlighters are fading. So services, frameworks, AI compute, open source, and marketplace. So first, we'll look at services. The conductor DPE and the conductor RCA. So their first topic is the conductor DPE. Developer and agent observability for the AI era. Conductor DPE is an advanced observability and productivity platform designed to accelerate software and AI development by removing friction across the engineering and deployment life cycles. Originally built to optimize developer velocity, track builds, and monitor deployments, Conductor DPE has evolved into a unified platform that now manages both developer workflows and AI agent operations, delivering real-time insight into every stage of human and machine collaboration. With Conductor DPE, teams can track and optimize AI agent performance, monitor agent deployments, runtime behavior, reasoning paths, and token utilization for cost control and transparency. They can enhance build and release efficiency, streamline continuous delivery pipelines with intelligent automation, ensuring faster, more reliable releases, detect and resolve issues early, identify performance bottlenecks, bugs, and anomalies across code and agent executions before they have a bad impact on production. Keep developers and agents in flow. Maintain productivity through proactive observability, automated insights, and tools that reduce context switching and downtime. The conductor RCA, root cause agent, is a core innovation designed to automatically identify, analyze, and surface the underlying causes of software errors in real time. Instead of teams spending hours manually sifting through logs or debugging in production, the root cause agent proactively pinpoints the exact lines of code, the affected systems, and potential fixes, dramatically reducing mean time to resolution, MTTR. We all want reduced MTTR. Errors don't just disrupt individual developers, they ripple across the entire team, slowing down velocity, delaying releases, and driving up engineering costs. Bullet. Developer costs. 20% of developer time spent on bugs. 20,000 per year per developer. Bullet. Escalation. Late phase bugs cost 10 to 100 times more. That's a lot. Bullet. Economic burden. 2 to 2.4 trillion annually worldwide. Bullet. High impact incidents ranging from $10 million to hundreds of millions per event, plus significant brand server costs. Bullet. Intangible loss, reputation, trust, regulatory penalties, and team demotion. IBM data confirms late-stage fixes are 4 to 5 times more expensive and can be up to 100 times more than early fixes. So here's a chart from their website. We've seen it before. The problem is data fragmentation. And it's described, none of the prominent data providers seamlessly integrate and understand the full scope of a client's application. So you have ticket data from things like GitHub and two others that I can't, Accenture, I think is one of them. You have developed data, Jenkins, Terraform, and I really can't read the other one. Application log data, SolarWind, Google. You have documentation data, Google Docs, whatever the symbol N stands for. And then you have code, which could be GitHub or Azure, for example. And the solution is data unification. Conductor provides a single platform that comprehensively ingests and unifies all application data, making sense of it all. It's a bold claim for a one-eyed fat man. There it is, the picture. This is all disparate, and it comes down onto one platform. The cost in developer hours, on average, developers spend 20% of their time troubleshooting and fixing bugs. For a $100K a year engineer, that translates to 20,000 per year per developer absorbed by bug work. Got to call Orkin. A team of 500 developers, for example, that's roughly 1,600 hours per month, or $80,000 in salary costs per month tied up in reactive bug fixing. Then he describes, or they describe, exponential escalation in fixed costs. Bugs discovered during a design of a software, it's $100 to fix. In QA, I don't know what QA stands for, it's $1,500 to fix a bug. In production, it's $10,000. IBM data confirms late-stage fixes are 4 to 5 times more expensive and can be up to 100 times costlier than early fixes. Broader economic impact. CISQ, maybe that's Cisco, 2020 estimates poor software quality cost had a cost to the United States of $2.8 trillion alone, encompassing failed projects, breaches, and outages. The estimate that poor software quality costs $2.08 trillion in the United States alone. Tricentis reports $2.2 trillion globally per year in losses attributable to bugs. SmartBear attributes $1.1 trillion globally to software failures, leading to 315 years of end user downtime. The hidden damage is brand, trust, and legal risk. Software bugs undermine reputation, accelerate customer churn, and depress future sales. Regulatory and legal fallout from bugs, especially those causing breaches or financial harm, compound damage. For example, Wells Fargo or VW emissions. Developer team morale also suffers. Burnout is common, potentially increasing turnover costs and reducing productivity. Summary. Developer costs 20% of developer time is spent on bugs, 20,000 per developer per year. Escalation. Late phase bugs cost 10 to 100 times more. Economic burden. 2 to 2.4 trillion with a T annually worldwide. High impact incidents ranging from 10 million to hundreds of millions of dollars per event, plus significant brand and server costs. Intangible loss, reputation, trust, regulatory penalties, and team demotivation. Recommendation. Invest in early detection, automated testing, static analysis, CI/CD pipelines. Enforce guardrails. dedicated QA, peer reviews, shift left security, monitor and triage, crash reporting and analytics tools to reduce triage time by up to 90%. Cultivate quality culture. Avoid unrealistic deadlines that force technical debt and bug accumulation. Okay, then they have a page on industry information. One discussion is the software development tools market. According to Mordor Intelligence, this segment was valued at US dollars 6.41 billion in 2025. It is forecasted to reach US dollars 13.7 billion by 2030, a strong growth rate. Business Research Insights, March of 2025, reports a market size of US dollars 6.61 billion in 2024, expected to surge to US dollars 22.6 billion by 2033. Again, a strong growth rate. The business research company estimates growth from US dollars 5.84 billion in 2023 to US dollars 6.31 billion in 24, forecasting a US dollars 8.6 billion software development tools market by 2028. They don't average it, but you get the idea. Then they discuss the broader developer tools ecosystem. A Medium analysis, that's a company, Medium analysis, cites a 167 billion valuation in 2023, rising to 234 billion by 2028. This includes code platforms, services, low code, CI over CD, etc. A Wikipedia entry, probably echoing industry data, cites a $49 billion developer-led category in 2021, including SDLC tools, APIs, and infrastructure. Verified Market, again, it's a consulting or magazine. Verified Market reports list a $61.5 billion developer market in 2023, with a somewhat modest growth expected. Frameworks, which is ADK conductor and RAG conductor, is up next. So Conductor ADK, Agent Development Kit for building AI agents. Bullet points. Bullet, agentic framework for building autonomous AI agents. Bullet, enables dynamic interaction with large language models, tools, and APIs to solve complex tasks. Bullet, simplifies integration by handling low-level engineering so developers can focus on architecture and innovation. Bullet, enhances control over model deployment, data security, and infrastructure. Bullet, streamlines deployment, accelerating time to market for AI-powered applications. And then they give a picture here, which causes me to wonder, is there more to be revealed? And I'm not going to pretend to fully understand this chart. You got memory, large language models, and tools in Conductor ADK. But then you've got these interactions over here with TELUS. And this wasn't really described in that news release. And an obvious question, of course, is show me the money. What does it mean in bottom line? What does it mean? All right, and then the next page is Conductor RAG, Retrieval Augmented Generation, RAG framework. And again, it's all bullet points. Bullet, universal data ingestion, pre-built connectors to seamlessly ingest unstructured data from any source. That sounds pretty powerful, to seamlessly ingest unstructured data from any source. Bullet, high performance engine, a robust, scalable engine designed for high speed data ingestion. And processing. Built on Apache Kafka. Leverages Apache Kafka for efficient real-time streaming and event-driven data processing. Bullet, data transformation and cleaning, includes a built-in pipeline for transforming and cleaning data before storage, ensuring quality and consistency. Bullet, flexible data storage, supports persistence in a variety of storage systems, including file storage, SQL Server, and other destinations. Bullet, automation and triggers, capable of triggering real-time alerts / automation. Bullet, seamless integration, easily integrates with existing data structure, enabling fast and reliable data flows. That sounds important. Real-time processing, capable of handling large volumes of real-time data for immediate analysis and reaction. That sounds mighty powerful to me as well. Then they give a picture, and again, I notice over here, all this TELUS hookup, which I'd like to know more about. but I'm not going to pretend to be able to describe this to you. This is Apache Kafka. Here's all the tellus, and here's the, I guess, the various solutions. It's ingestion, storage, and AI services. But I'm not going to even begin to understand what all that is. The next page is industry information as it relates to, I guess, retrieval augmented generation frameworks. We'll see what they say here. Let me just try to warm up a little bit. That feels better. Okay, so this is industry information under AI frameworks. Understanding agentic AI frameworks. AI agent frameworks are tools for constructing and launching AI agents. These frameworks offer a suite of tools, libraries, and predefined components that streamline the development process and empower businesses to create intelligent applications without a deep AI skill set. Sounds like right up my alley. Benefits of using AI agent frameworks. Again, bullet points. Bullet, reduce development time and costs. AI agent frameworks offer pre-built components and functionalities, sparing businesses the effort of building from the ground up. I think that's very important in this fast-paced space. Bullet, enhanced scalability. AI agent frameworks are engineered to manage extensive data sets and complex processes, making them highly scalable and flexible to evolving business needs. Bullet, improved efficiency. Through the automation of mundane, repetitive tasks, AI agent frameworks free up human resources to concentrate on more valuable endeavors, thus enhancing overall efficiency. Bullet, enhanced accuracy and consistency. AI agent frameworks use machine learning algorithms to perpetually enhance their capabilities, ensuring precise and uniform results while minimizing the potential for human error. Bullet, seamless integration. AI agent frameworks are crafted to integrate with your current systems and applications, allowing you to seamlessly incorporate AI capabilities into your operations without major disruptions. Again, it seems pretty important. They have the ask under 40 cents. It's a bid of $38.41 to $39.99. Are you out of your mind? There hasn't been a lot of volume traded, but remember, what the shorts do is press their bet. On 100,000 shares, whether they do it all at once or in rapid fire, do it in the dark pools, do it broken up, do it here with one LLC, move it to another, whatever the strategy is, if simplistically, if they got 100,000 shares off at the high, 41 cents, and they covered at the low 38 cents on 100,000 shares, that's $3,000. Well, obviously they didn't do that. But if they did half of that, that's $1,500 automatically with computer selling. It's not hard work. $1,500 is better than emptying bedpans for a living. And they think they're big Wall Street swinging, guys. So I know it doesn't look good. Hey, if this is so great, why is it down 0.0067 cents? Why is it in the red? Well, of course it is. This is what they do. I think this period of their ability to push their bets and just try to get that extra grand or $2,000 or $3,000 and hopefully hit stop limits, and maybe they'll hit an air pocket. I think that period's going to come to an end very soon. But until then, they're going to play it for all they're worth. They're protected by regulatory indifference. They're protected by a bought and paid for Congress. They own the key regulators by at least the implied bribe will get you a job at a white shoe law firm, or you'll retire as a Goldman Sachs director. And then no one cares at your brokerage firm because it's commission. So it's a really disgusting setup. We've been going through, I know it's been hard to listen to, but we've been going through how this is all designed this way. It's all designed this way. But this is my attitude. I'm really encouraged by what the company's doing now. We went through this long period of limbo with no confirmation. We've got, in the last 3 days, we've received tremendous confirmation of the story. First, with an excellent interview given by Rebecca Kurzweil of Dr. Tom Core. Secondly, by, I think, exciting news from TELUS, but it seems like there's some splaining to do. And I think this detailed corporate presentation is excellent. But today, this hour, the shorts have one goal: press their bet. They're just trying to make pennies, half a penny, a third of a penny, a tenth of a penny, and scare you into inaction, keep you from buying, or maybe even convince you, all of this is crap. It's not crap. This is fantastic news. But they don't care about this news. They haven't read it. All they want to do is press it a little more. And the fact is, you and I, we don't have any money to really move the stock. And I would argue that any of our buying, it may have some impact in supporting the price, but I don't think we move the price upward at all. I think that all is going to come out of Canada. And we can talk about it when I get through here. I think there's possible explanations for why big Canadian buying hasn't come in yet. But let's finish this first, so we stay on track. The next page is called AI Agents and Agent Development Kits, ADKs, the Market Growth Outlook. For AI agents market growth, Mordor, Mordor, it sounds like I don't know, a Pink Floyd song. Mordor or Led Zeppelin. Mordor Intelligence, the size of this market and its growth. 1.65 billion in 24, 69 billion in 2034. Huge annual growth rate. SAC Insight, 5.38 billion in 2024, 95 billion by 2032. TechCrunch, 52 billion by 2030. Business Insider, 5.68 billion in 2024, 38 billion in 2029. Again, huge annual growth. The consensus is explosive growth in the AI agents market. Agentic AI development platforms, ADKs, Agentic AI development platforms market, Mordor Intelligence, currently 10.75 billion. They anticipate it to grow to 51 billion by 2030. ADKs, foundational toolkits to build, manage, and deploy AI agents. Growth is directly tied to agent adoption across industries. They go into AI agents and ADKs relationships. More agents translates into more ADKs. The drivers are enterprise automation, customer support automation, workflow orchestration. And the industry signals, I'm not sure what he means by that, are Amazon Agent Core, NVIDIA NeMo, and Google Agent Protocol. The industry momentum. Enterprise agents, 2.59 billion last year, projected to be 24.5 billion by 2030. Agent Assist, 4.4 billion last year, 125 billion by 2024. That's the estimate by Agent Assist. Major investment. AWS, Amazon, NVIDIA, Google are all driving ADK infrastructure. So the summary and the takeaway. AI agents are around 5 to 6 billion now. There'll be 50 to 100 billion by 2030. ADKs, 11 billion now, 51 billion in 5 years. ADKs will scale in tandem with agent adoption. There are strong tailwinds from enterprise use cases, hyperscalers, and vertical adoption. all a little over my head. I'd rather read about golf. Okay, so framework comparisons is the next subject. So they're going to compare conductor ADK to LangGraph versus Google agent development. You know what I'm going to do? I'm going to stop right there because I've prepared something to show you on that. And that'll be a good break from that presentation so I can answer your questions. But I have something prepared for that. I have to go through your comments first, because if I go collect my visual, it'll erase an hour's worth of comments. So let's go through the comments first. Right now, Railtown is bidding $38.41, 26,500 shares. The ask is $40.42. They're showing a bunch of stock for sale. There's no stock for sale that's real. But remember, my daily education to you from the Great Taking, it's legal to sell you crap, to sell you an entitlement. So Railtown's our escape. But before we escape, they're going to give us a little bit of punishment first. But that's your opportunity, my opinion, to keep buying. The information out here is supremely excellent. Excellent. But you're expecting that these automatic sellers are studying this? They're not studying it. They're just pushing their bet to try to take a little bit more, maybe hit some stop loss, stop limit orders. You shouldn't have any of those in. This is their last chance to steal from you. It may go on just for today. It may go on for a few days. But let's get through your comments, and I will try to discuss my ideas on why in Canada, possible reasons why in Canada the buying has not come in yet. And once the buying comes in, these relentless abusers of capital formation in the over-the-counter markets with the permission of the executives at the OTC markets by inaction and by Adina Friedman at the NASDAQ market, which she's destroying. It was a beautiful market. It may not be her fault, but she's not fighting it. And by Ann Wagner, who's basically an idiot. She just reads things from Goldman Sachs lobbyists and tells us that she's fighting for our privacy, when if you cross the road in most major cities, there's a camera of you. If you drive through a toll booth, there's a camera. If you go to an airport, your face is recognized. If you use your phone to make a payment, they know what you did. If you use your card, they know what you did. If you use your cell phone to talk and say something provocative, or just talk about something controversial in this woke, womanized world, but it's not just women, it's just a different world than I grew up in. They know who you are. They can track your voice. If you travel too much, they know it. They know everything. Except Ann Wagner wants to protect your privacy so that Wall Street, she thinks, won't know your trades. That's the sign of an unintelligent person or someone that's bought and paid for. But this is what's happening today. One of these days, as they try to do this, it'll sting them. And then they'll lose on those trades and they'll make it up. They'll make it up in all the other stocks they're destroying. And remember, they've worked it out, particularly, I think it was under the Clinton administration, but it all through, doesn't matter. It's not Democrat or Republican. They've worked it out. This high frequency trading, 60% of their short-term gains are treated as long-term gains. Why? And if they have losses, they can offset their gains. So if they have a temporary hit or loss that they have to move and burn an LLC, burn a relationship with a prime broker like Alpine, spend money on legal, they write it off. Guys and gals, you are subsidizing the greatest theft, and it's from your own pocket, because we don't speak up. We don't speak up. We're so dispersed that Congress doesn't care about us. But man, do they care about BlackRock, Citadel, Goldman Sachs. Anyway, we'll talk about it. I see this as a gigantic opportunity to buy the stock. And I'll show you why. And it's in this presentation. So this means Corey's going to be going out and telling it to institutions. You're not going to see this stock at 40 cents much longer. You've been saying that. You've been saying that for 2 months, 3 months. I know. That's the flaw. That's the flaw. But does that mean that I'm going to continue being wrong? I don't think so. What's the big change? Apparently, the company can start talking about their own product. They are doing it. They put this up this morning or last night. I don't know when it went up. All right, let's go through your comments before I go further. Pete the Greek. Oopa, Pete. You are numero. You're a dean. I don't know how to say it in Greek. I know Novak Djokovic now lives in Greece. Darren Collins, hello. Thibaut Teals, hello. Jack Hamilton, thank you again for the email. It was some good reading. Yeah, something to fall asleep by. Thibaut Tees, Can Nguyen, good morning. Account settings, good afternoon. Guillaume, how are you? Hello, everyone. Thank you for sending me an email. My new total. I've got to get that new total down. $127,599. You know, not to repeat myself, but I'll take the chance. Account settings. What you're doing by adding to your position is you are fighting back on this system in the only way that matters to these bastards. Their pocketbook. Now, they're protected every way till Sunday. Tax write-offs. They can bury their losses. They can move it over to Europe. Ann Wagner doesn't care. Nobody cares. So they can bury it. And it's just a big blurred in number to them. This is just one of thousands that they destroy every year. It's just how it is. And they've got their Goombas smiling at the over-the-counter market. They've got the woman who actually believes she's one of the top 5 most powerful women on Wall Street. She's a dupe. She's a dupe. So the way to fight back is exactly what you're doing, account settings. We can't think about how they're going to write it off and they're going to get away with it and we're all angry. We leave that behind. The way to break out here is to make money and take advantage of their short-term goal. They have a nanosecond goal to make half a penny on stock. And you've been trained that everything you need to know is in the price of the stock. That's how Wall Street's trained you and me and all of us. It's not true. It's true when there are buyers. There are no buyers in Adena Friedman's NASDAQ under $5 because of the Merrill Lynch rule. There are no buyers in the over-the-counter market. There are no informed buyers. Occasionally, the charm boys get a hepped-up emotion going amongst people that still believe that the market is what it used to be, but it's not informed buying, and it's not consistent buying, and it's not able to step in over and over again. There's no thundering herd of brokers telling their clients, you've got to buy, G-Bucks. There's no one at Goldman Sachs or Merrill Lynch telling their clients to buy G-Bucks. Nobody. Nobody. Right now, they're not telling their clients about Railtown either. But that's going to change. That's going to change. And this gives you an opportunity to build your position. I would say before Thanksgiving. Now you're going to say, you've always been wrong. And well, fair enough. Fair enough. But what do you want me to say? By Pearl Harbor? By Hanukkah? By Christmas? Pick a time. Doesn't matter to me. Let's just say 30 days. Let's say 4 weeks. You've got a $4, $5, $6 stock. 10x. And that's the starting point. What is it? It's going to be the arbitrage between private valuations that Wall Street is crediting to an analog, to a comp. Private valuation, the public valuation is going to catch up like a son of a gun. It hasn't started yet because the institutions aren't buying yet. And we'll talk about my ideas on why that might be. So it gives you, account settings, an opportunity to build this position, which is beautiful. This is a beautiful position. 127,599 shares. Counterintuitively, when the stock is $5, you might only be able to buy 10,000 shares. And I'm not talking about your money. I'm talking about the fact there may only be 10,000 shares available at $5. I mean, I don't know exactly when the loan desks, the stock loan desks, are going to turn off the spigot of hypothecating and rehypothecating. I don't know when compliance officers, if they actually exist anymore, are going to tell their client, the market makers, hey, whoa, boy, whoa, whoa, whoa. No more counterfeiting of shares. No more treating the securities market like it's a fractional reserve banking market. We can't leverage up that much anymore in this stock. Take it off your screen. I don't know what price. Is it at $1? Is it at $5? Is it at $10? When it happens, there won't be any stock available anymore. And account settings, as the institutions come in to buy, which they will, that stock comes off the market. I heard a great expression last night. Great expression. I wish I had heard it earlier in my lifetime. But a guy that knows what he's talking about. He said, if retail is selling to retail, that's taking a profit, and good on you. But if retail is selling to institutions, that's a mistake. Because institutions don't flip. They're buying. They know it's going higher. So account settings, I really commend you. I'm proud of your efforts. Now's the time to buy the stock. And I don't notice anybody doing it so far. There may be some, but you're the first one, and I'm very proud of you. Now is the time to buy this stock. Don't get stuck in lethargy. Don't get stuck by the fact I've been saying the same thing since June, except for August. Well, I don't know what I said in August, but I warned you that August would be a non-event. But I'm sure I said keep buying. Don't let that affect your decision. The information is flowing. The marketing is coming. The pitches are coming. And you know what we haven't heard about yet on my list? I told you about that they were going to have a new corporate presentation. That was on my list. I told you they'd have to start having interviews. Well, that started with Rebecca's excellent workmanship on Monday and Dr. Kaur's kind participation. That started. I told you there'd be more news. I didn't know. It was TELUS is the start. But do you think that's the last news they're going to talk about? I did say the AIP deal would close. And as far as I can tell, I've looked before I came on. They haven't filed anything yet. I don't know if that's because the attorneys are SLOW, or, you know, in the document it said they wanted a unanimous consent. Maybe they're getting unanimous signatures. I don't know. But that hasn't quite happened yet. But there's no risk it's going to unwind. There's absolutely no risk. That thing is, you heard it in Rebecca's opening statement. You heard it in Dr. Tom Kaur's discussion, and now it's in this presentation. So it's obvious that is a completed deal. What's not obvious is that they finished all the paperwork. That's all. It's just routine. Anyway, when that comes, that's one of the things we'll check off our list. So what else is on the list that we created? One's revenue. We haven't seen any revenue yet. We haven't seen a description of the revenue. We haven't seen a discussion of the path to revenue. That's surely got to be coming. Surely. Don't call me Shirley. And research has to be coming. I know I was aggressive in my prediction for research, but to me, it was predicated on the AI partnership deal being done and dusted. So I have a little wiggle room, but I still think research is going to be sooner rather than later. Anyway, let me keep going. Julius, word of the day, patience. Yes, patience. Eddie Eagle, hi, Mr. Beal. Hi, Beal. Hi, Beal. That's how they say it in the South. Hi, Bill. Hey, Bill. How you doing, Bill? Can you get a light bulb, Bill? I like it, actually. Eric B., massively undervalued play. Oh, I see what you're saying. It's a Black Friday sales deal. That's a good point. It's on sale. I'd be grabbing it all. It's not going to last forever. I know it feels that way, but you got to fight that feeling. Add 10K, Eric. That's great. That's awesome. Julie Kim. Yeah, well, that's the same with me, Julie. You're in, I don't know if that's good company, but I'm in good company. Want a huge buy, but no money. Exactly. That's what these shorts count on. And remember, their goal is disconnected from your goal. They are not making an investment. They are not even sizing up the story for value versus what it should be worth. All they're trying to do each and every day with high frequency trading with computer programs is steal money out of the market. And it's okayed by the Clinton administration and the other administrations, all of them. They're all in on it. Why do you think the banks pay Hillary Clinton $500,000 a speech? Why do they give it to Janet Yellen? $400,000 a speech. Is she that good to speak her? The way out is Railtown. Julie Kim, congrats, Eric B. All right, Viking Storm link to the presentation. Thank you. You can find it on Railtown.ai is where I think it is. Or you go to, I think it's railtowntechnologies.com. They have two websites. I think it's both places, but one of their websites seems to be set up as a marketing tool, the other as a investor tool. Both are excellent. Deschamps. All right. Deschamps. That is awesome. You're taking advantage of it. That is awesome. Deschamps. Hi, Dick. I'm not going to pronounce your last name because I'll say hi, Richard Slayer. Mary Patton. I just added another 1,000. All right, Mary, way to do it. That's going to be the best thing you've ever done, except get married and have children and rescue a dog or a cat. Look, I'll go with this, but guys, be very careful of Dennis Alex. He is going to, not because he's a bad guy, he's a traitor. He's going to convince you, or try to, when it's $4, $5, $6. Hey, it's a win. You got to sell. You got to go do this. Please, Railtown is not a day trade. It's not a trading stock. The stock is mispriced. I'll show you that in a minute. The stock right now should be $4, $5, $6, $7, $8, depending on what denominator you use. And that price is the beginning. So the reason I react to Dennis Alex, he wants to give you, the reason to sell. Now, if I remember his question in fairness yesterday, is what do you do at $55 if it gets there? I have the same reaction right now. It is not clear to me yet that $50 is it. There are scenarios where $55 is a hold. Hold, hold, hold. I know Dennis is in an IRA, he says, so there's no tax consequences. But I remember, I think it was Dennis who sold the stock and then bought it back lower and went and treated himself to a feast at Capitol Grill. I don't know. My memory might be off, but I don't know how he plucked that profit out of his IRA. Something doesn't register. I don't know Dennis Alex, so I could be wrong. He says, I'm not a short. I have an IRA. Those two things are not contradictory. Can't short in an IRA. I never said you could. Not spreading fear. Well, maybe not intentionally. Just wanted to discuss an exit strategy yesterday. That's what he's doing. He's getting you thinking, when do I get out? How do I get out? This is hot money. I'm telling you people, Railtown at this point is a one decision stock, in my judgment. Buy it, buy Railtown, go fishing. Buy Railtown, work on your crosswords. Buy Railtown, work on a painting. Buy Railtown, build out a deck. Buy Railtown, rehab your basement. Buy Railtown, go traveling. You do not need to think about an exit on Railtown now. Now, that doesn't mean there's two scenarios that we have to be wary of. And I don't know how we prepare for it. I see a lot of discussion in the media about an AI crash. The guy Burry is betting against AI. Yeah, but that's AI. That's 7 stocks that are maybe overpriced. It's not Railtown. It's not data centers. You read about, I think it's Deutsche Bank, shorting some of the NVIDIAs of the world to offset their investments in data centers. That's hedging. So the headlines are a little misleading. And I get it third hand. I think third hand. But there are people at Microsoft, apparently, who believe that this AI arms race, this AI rush is going to go on for 5 years. I don't know. So on the one hand, we've got to look at the overall market and then the AI market space. I don't see anything for the fourth quarter or for the first quarter, second quarter, third quarter yet. But that's just something we got to be aware of. The second thing I worry about is what if there is a short squeeze in Railtown? I don't want one, and I'm not predicting one. But there is potentially a large short position. So what if Railtown goes to $20 or $25 quickly? I'm telling you, you don't want to sell. Now, I can't, there will be selling. But I think when you sell at 15, 20, 25, institutions are going to be buying it mostly, not shorts. And at some point, the shorts will try their game and they'll be cut off. And if you take a profit there, you're creating a tax obligation, and then you're hoping it pulls back so you can buy shares back. Two problems with that. It may not pull back as much as you expect because institutions are buying. And two, you may not be able to replace the shares, the volume of shares you had, just because they're not available. So I think, I just hope it doesn't happen. But we'll have to address it there. It gets more complicated. What if it goes to 150? I'm making up an absurd number. Well, then there's decisions. And of course, Dennis is going to say, oh, I'm all in my IRA. Okay, I believe you. That's different, but not everybody's in an IRA. So I just wanted to discuss an exit strategy. See, Dennis is playing hurt, like I was rude to him. He's a good guy. I'm an asshole. That's all psychological to get you listening to him, not to me. And also getting you thinking in that reptile part of your brain, I better think of an exit. Railtown is going to be bought. In my judgment, I gave you my list. Microsoft, number 1. Constellation Software, number 2. NVIDIA, number 3. AMD, number 4. TELUS, number 5, because I think if TELUS does it, it's going to be a low price. So my bias, I hope they don't do it. And then number 6, just a grab bag of every other company you can think of. Apple, Elon Musk, Oracle. But I think the most likely buyer is Microsoft. Now, if Microsoft comes into management and management says, hell no, we're not selling yet, well, they might try to do it anyway, and then it's out in the public space, and then maybe NVIDIA joins in, you get a bidding war. You guys don't have to think about an exit strategy. And that's what annoys me about what Dennis Alex is trying to do. Number 1, it's the wrong time to talk about it. And number 3, the exit strategy here with 85 to 95% certainty at this point, it can change. The company's going to be bought out with stock, so you don't have a taxable event, and then you have shares in a stock that Dennis Alex can't shake you out of. That's my opinion of what Dennis is doing. Now, he may not be purposely doing that. He says, please don't discredit me to your listeners. Well, I'll leave it up to you what you think. I've given you my thoughts on it. Dennis Alex added 1,700 at 30. I don't believe you, so I'm not going to add it in at 39 cents. I don't believe it. Ward Richardson, good day, William and RT crew. First of all, thank you for the email you sent last night on this RT presentation. It is packed with valuable information. I will be going back over the presentation tonight. I will come up with some questions about it. I also have some questions about the press release on Railtown the other day. They are in my notes. I will get the questions to you in the next couple of days. There is a lot, Ward says, to talk about here. Glad to see you are sharing the news with the RT crew. And thank you again, William. Ward Richardson. Sam Guest. That is awesome. I'll write that down. 17,089. That is awesome, Sam. Bravo. And Hawaii bought 14 more. That's great. I not Bank Hawaii. I not Bank America. Everybody think I Bank America. That's awesome, 808. 14 more. My OTC fee was more than the cost of the shares. Isn't that something? But in a way, you just put that. Maybe you just paid $1 a share. I think it's great. I think it's great. You don't see it yet. I know it's annoying. It's hard to believe. It's 154,000 shares. Let's look at what Canada's trading today. I don't see the volume. Here. So in Canada, the volume is 60,000 shares. And that just supports my view that what happens in the over-the-counter market is rehypothecating the flash boy trading, computer programming, and sometimes they slow it down, but it's the same concept. It's just selling a bunch of securities entitlements that don't exist, leveraging the bet. I mean, these guys would literally bet if they were, driving down the highway together, they'd bet on whether a bird is going to hit the windshield in the next half an hour. They'll bet on anything and they'll call it investing. We got to get away from it. Yeah, it's low volume in Canada. Um, Here it's 154,000 shares, and in Canada, where it matters, it's 60,000 shares. So what do you think's going on? We know what's going on. Giuseppe, hello and thank you. Hello again. Hello. Ward Richardson, 808. No worries. That 695 will pay for itself in no time. And if you just blend it all in, cost, we used to, when I left, I think the minimum ticket, was $60 on any trade. I think it was. Started at $35. And then, every revenue enhancement, they'd call us together and try to make it sound good for us. But the more they put on the minimum ticket, it cut in to what, because if you charge the minimum ticket, you're not getting paid out. Um, 808 says, Ward, I agree with you 100%. Will Underdown, hello, William. Account settings, thank you, William. I will be adding more in the coming days. Good luck to all. Well, if it starts going up, I still think it's valuable, and I can't give an example in my life because I don't expect any money that I can use. But in your case, if your average price is 50 cents or 45 cents, and you add more at 80 cents or at $1 or $1.25 or even higher, you're paying more on the margin, but your cumulative average price, you still are running a profit, and it makes sense to add. I think I really, and I'll try to show you why I believe that. I really believe this stock is a $4, $5, $6, $7, $8 stock right now. And it's just awareness. And it's just the lack of buying, which we can go over some of those reasons. But that lack of buying isn't going to stay that way. It's not going to stay that way. And so now they've got it 38.6 to 39.5. What an incredible price to buy. And, the next thing you know, they'll try to get it down to something else. But it's just incredible. I wish I had money. Pat M, I had put an order in at 38.1, and they put the bid at 38.11. There, yeah. Then I moved it to 38.5. They put the bid at 38.51. Then I put it at 38.6. They moved. Yeah, of course it's suspicious. What you just got to give up, Pat, and just put it in at the ask. And what'll happen is they won't fill it at the ask. They'll fill it in between. So you get a better price than the ask, but then you'll have a little remainder of money that you can't invest without paying the $6.95. Ward Richardson, I think RT is very well known in Canada, judging what I read in the AI industry. You will not hear anything in the States about Railtown. That's true. You're not going to hear about it from wealth advisors. You're not going to hear about it from your Merrill Lynch broker. You're not going to hear about it from your, nobody's going to relay it here in the United States. So, yeah, it'll change. It'll change. But it's an interesting thing up in Canada, Ward, when you think about it. they have a very active low price stock market. And there are research companies that follow the low price stocks up in Canada. Not so much here. Not there's these fake research like Benchmark that just funnels companies into the slaughterhouse of Lynn Partners and the Toad, in my judgment. And there is shorting that goes on in Canada, don't get me wrong. But there's also brokerage houses in Canada and brokers who actually cater to the lower price, because most of their stocks are lower priced. So that's a positive for us in Canada. Ward Richardson, mum's the word. Okay, so what I want to do is show you a couple of things regarding this presentation. What is this? Now tell us. Tell her you belong to me. All right, I'm not going to race anymore because I don't know what it is. Okay. First, you have to see that. I have to show you the cutest picture first. Have you ever seen a cuter beagle and a better retriever? I don't know which one I would rather hug after a picture like that. I'd probably want to go over there and just sit down next to him. All right, let me show you. This was put out in a teaser presentation, which I didn't bother showing you because this one supersedes it. But they compare this. You can see the similar presentation up here. They compare the market cap of Langchain to Railtown, 1.1 billion to 100 million Canadian. You and I have done that quite a bit. All right, so now I'm going to go back to the presentation. And this is comparing frameworks, Conductor versus Landgraf, and Google, but we're not going to compare ourselves against Google. So here's what's in the presentation. Conductor, the features, and their competition. They do it for 2 pages. And I just want to show you my take on it. And I ignored the Google over here because we're not comparing our valuation to Google. And I don't know what the heck I'm talking about here, what the feature means. Memory auto extend, conductor has it, LangChain doesn't. And you've heard of LangChain from me before, coincidentally. I just found that separately. RAG, memory lookup, conductor has it, LangChain has it. Prompt manager, conductor has it, LangChain doesn't have it. Remote model support, I don't know what light LLM means. LangChain has it. I'm not sure conductor has it, so I didn't check conductor. Local model support, yes. LangChain, there's some complicated stuff there, so I assume they don't really have it the way Railtown does. Docker, yes, whatever that is. LangChain, no. Vector, yes. But then on the LangChain, it says, yes, use Chroma and other DB not built by LangChain. So I don't know what that means. It sounds expensive. State management, yes. LangChain, no. Error recovery, yes. LangChain, no. And then that goes on, the feature, conductor, MCP. Was that the same one? Did I put it up twice? No. That's the next page. MCP, yes. LangChain, it's some sort of half answer, so I didn't check it. Context management. I assume global means yes, but I wasn't sure, but anyway, I checked it. LangChain, no. Logging, yes. LangChain, again, it's basic, it's paid partner network. I don't know if that's really a yes. Human, yes. LangChain, yes. Visual chat, yes for conductor. Again, it's not maintained. What does that mean? It's a no. Visual debug, yes under conductor, no under LangChain. Tools, docstring plus AI. LangChain's docstring doesn't have AI, but it has it, so I checked it. Documentation, yes for conductor. Not really for LangChain. Multi-agent, yes for conductor. It's only basic in LangChain. Streaming, yes for conductor. Yes for LangChain. Multimodal, yes for conductor. No for LangChain. Cache, yes for conductor. It's beta, so I didn't check it. Auto shot, yes for conductor, no for LangChain. All right, now I want to call your attention. This isn't in the presentation, but this is something I showed you a couple of weeks ago. I didn't know that this was going to be the comp or the analog in this presentation. I had no idea. But according to Mariah Deutscher at SiliconANGLE, I don't see the date here, but it was a couple weeks ago. Maybe 3. LangChain, a startup, it's a startup that helps developers build artificial intelligence agents, has raised $125 million in funding at a $1.25 billion valuation. I'm not going to read all this. We did it before, but it's not necessary. We just looked at the comparison. So they raised 125 million at a 1.25 billion valuation. Again, I'm not going to read all this, but down here, according to TechCrunch, LangChain generated between 12 million and 16 million in annualized recurring revenue as of June this year. It's not profitable. LangChain is not yet profitable. But claims to be spending its funding more efficiently than others. So here's the revenue on an annualized basis. Call it 15 million that we have to compete with. That's not a high hurdle. It's not a high hurdle. Let me look at what this is. All right, I'm going to take that down too. Just free up space. All right, so I showed you this in comparison. My read is Railtown is a better product than the company that was just valued at 1.25 billion. I showed you yesterday, LangChain private, I did the arithmetic, in Canada, 5.62, but that's actually US. LangChain is a US valuation. That's actually a US dollar target, $5.62. We can go over that again. I just want to finish this presentation. The next division is AI compute. And again, it's Conductor, AI cloud. Very complicated chart, and I'm not going to pretend to understand it, but I do want to point out to you I just want to point out the headline and suggest to you that there's probably more to be revealed than what we saw on Tuesday. I don't know. But this is Railtown AI, TELUS Corp, Compute Partnership. I can't make head nor tails out of this. But look at TELUS, TELUS, TELUS. And then the arrows back and forth, arrows around it, you know. It could be there's more for us to learn than just that one puny, paltry press release. All right, now the next page is entitled Railtown Revenue Model, Roadhouse. And I'll read it to you. Railtown AI Technologies is monetizing its newly announced partnership with TELUS. How? What's it worth? Some of that might be here. Let's see what it says. Railtown AI Technologies is monetizing its newly announced partnership with TELUS. And the shorts want you to think that's bad. TELUS is a $30 billion company. They just built one anyway, they're working on another, brand new data centers. You can't believe this stock price right now. You can't believe it. So Railtown AI Technologies is monetizing its newly announced partnership with TELUS through the deployment of our agentic frameworks within TELUS's sovereign AI factory. Explain. While TELUS provides the hosting and compute infrastructure for large language models, Railtown contributes its proprietary agentic frameworks, tools that enable creation, orchestration, and management of autonomous AI agents. Hyperscalers like TELUS require frameworks or developer toolkits to make their hosted, that's interesting, hosted LLMs truly usable. Without these frameworks, it is extremely challenging for customers to build, deploy, and interact with AI agents effectively. By combining TELUS's secure domestic AI compute environment with Railtown's frameworks, customers can efficiently build and deploy AI agents while ensuring their data remains within Canada's borders. The revenue model is usage-based, okay, and directly tied to the success of AI deployments. For every agent built with Railtown's frameworks and deployed on TELUS's platform, for every agent built with Railtown's frameworks and deployed on TELUS's platform, Railtown receives a net percentage of the revenues generated by TELUS. Do you hear that? That's huge. And it's growing. It's like that Elvis Presley song. And it's growing. For every agent built with Railtown's frameworks and deployed on TELUS's platform, for every agent built with Railtown's frameworks and deployed on TELUS's platform, they just bought AI Partners Network. They just linked up with 3,000 companies at Uniserve. They've aligned themselves with, what is that, digital, with something like 1,400 entities or 14,000. That's just, I just think that's huge. But the market's not telling you it is. I would submit to you that the market either doesn't know about this yet or they can't buy yet. And we'll try to go through those scenarios. This aligns incentives between the two companies. The more AI agents businesses build and run using Railtown's frameworks on TELUS's infrastructure, the more revenue Railtown captures, creating a scalable and mutually beneficial monetization strategy. This is huge. This is gigantic. And you should be buying the stock with everything you can. This is gigantic. Yeah, but the stock's down. They don't know about it yet, or they can't buy yet. We'll try to go through all those. All right, the next division is Railtrack's open source ADK. And the first page under that heading is strategic value of open sourcing IP, community student version of Conductor ADK for Canadian universities. The strategic value of open sourcing IP. Open bullet point. Open source is a growth and influence strategy, not just a technical one. Bullet point. Accelerate adoption by removing friction for developers and enterprises. Bullet point. Build ecosystem and industry leadership through broad adoption. Bullet point. Drive innovation via community feedback and contributions. Bullet point. Create monetization paths via enterprise edition services or hosting. Bullet point. Enhance brand trust and attract top engineering talent. Next page, open sourcing IP, strategic outcomes. Bullet, rapid market penetration and ecosystem growth. Bullet point, increased developer mindshare and integrations. Bullet point, de facto standard potential in key technology areas. Bullet point, lower customer acquisition cost through open funnel. Bullet point, faster innovation cycles through external collaboration. All right, next page, owning the license, strategic control. Owning the open source license equals owning the rules of the game. Bullet, define clear commercial versus free use boundaries. Bullet, preserve governance and control over the roadmap. Bullet, prevent hostile forks and competitive misuse. Bullet, adapt licensing terms as business strategy evolves. Owning the license, value levers. Bullet, enable dual licensing for monetization flexibility. Bullet, mitigate legal and operational risks with tailored terms. Bullet, shape industry norms by influencing license models. Bullet, maintain brand and trademark control within the ecosystem. Bullet, create long-term leverage while supporting open innovation. All right, the final division is the marketplace, and it's their acquisition of AI Partnership Corporation. So the first page is AI Partnerships Corp at a glance. The profile, you know, headquarters in Toronto, founded in 2021. The affiliate network is 180 companies. The strategic transactions, it says here, is 1 to 5 companies. Not sure what that means yet, but we'll see if they explain it. The business overview, the affiliate network, 180 AI software as a service companies oriented toward business to business applications. Network is selected with highly scrutinized requirements, so it's selective. Financial performance measured to financial goals, synergies with other affiliates, recurring SaaS revenue models, user productivity, and efficiency enhancing products. Currently, affiliates serve 5,000 plus clients and are based in North America. The acquisition plan. It says identified, all right, I'll highlight that. Identified 3 to 5 shortlisted acquisition targets from the affiliate network. They're going to leverage prior experience working with these companies. The strategic plan is to acquire early stage AI companies at a discount. And then optimize cost across the acquisitions. The affiliates provide AIP with access to proven SaaS-based AI solutions that AIP resells on a systems integrator basis to customers looking for capability beyond what individual affiliate products and services provide. The summary. AI Partnerships is a global affiliate network of AI as a service-based companies. AIP has established a network of over 170 affiliates with combined approximate $400 million in revenue, and over 5,000 end user clients. The investment highlights. It's an accretive strategy. There's a premium for public SaaS companies provides a platform for discounted private company acquisitions supporting accretive cash flows. Opportunity to realize synergies across revenue, costs, valuation, and growth velocity. It's great. I don't know, the market's not reading this correctly. Efficient acquisitions, using the affiliate network as a pool of potential acquisition targets. AIP has already identified top performing companies. That's interesting. AIP is already leading to more efficient due diligence and transaction times. Renowned management team. Management and the board of directors are comprised of highly experienced members to execute a private equity roll-up strategy. Private equity roll-up strategy. Perfect. Experience. OMERS Venture Capital, Ontario Centers of Excellence, CEO of OMERS, and COO of IBM Canada. All right, the transaction summary. Railtown to acquire AIP on a cash-free debt-free basis, 100% share-based structure, Railtown to issue 40 million common shares at $5 million in performance-based convertible preferred shares. The transaction value is $20 million plus $5 million on a performance-based release. It's 40 million common shares at 50 cents, 5 million in performance-based convertible preferred shares. Board representation and management. Agreements in place for retention of key talent. They haven't retained me. One director from AIP to be invited to the board. The pro forma board is 5 directors. Corey Brandolini to remain as chief executive officer. We have that going for us. Diligence and timing. Conducted thorough due diligence across business functions. Certainly took your time being thorough. Customary regulatory approvals required. Expected closing Q4 2024. So we're in Q4. No need to be alarmed. We're already in it. The AIP Affiliate Partnership Network. Services and capabilities. AIP offers an AI product and services catalog across multiple industries, including manufacturing, finance, healthcare, construction, agriculture, telecom, tradcon, no, it doesn't say that, retail, automotive, HR, customer support, aerospace, utilities, and real estate. Their network provides expertise in machine learning, computer vision, NLP, automation, data science, robotics, cybersecurity, and more. These abilities enable clients to build an AI strategy and maturity, decide between in-house versus outsourced AI, access scalable subscription-based SaaS AI solutions, improve operations like retention, acquisition, forecasting, and automation. The strategic outcome. The acquisition of AIP establishes a first of its kind AI affiliate platform and marketplace, reaching beyond the one-dimensional matchmaking structure of partners simply connecting with buyers. Partners now gain access to technologies, frameworks, and infrastructure needed to build, deploy, and scale intelligent solutions more quickly. All right, I'm going to take a break right there. I didn't eat today except a very early bowl of cereal, so I'm going to go grab a banana because I'm fading. I'll be right back.
Nova, congratulations. Second appearance here at Center Court. Second win. I think you like to play in front of the Athenian crowd. It was a tougher match. Nuno played and really well, and it put a lot of pressure, but you look on top of physically and mentally. How was it winning the second time around here?
Καλησπέρα Ελλάδα. Πρώτα ο Θεός. It was a very physical battle. I thought that Nuno played on a very high level. Honestly, I must say that I was a bit surprised with how good he played. I think we went toe to toe most of the match. Very few points decided the winner tonight, really. So he deserves a big round of applause for his performance. And I just tried to hang in there. Obviously, serving well always helps in the important moments. I think it was 5-all maybe or 4-all in the first set, and I faced the 2 break points, and I had a couple of big serves, big second serve that was like a first serve. So sometimes risk pays off in the right moments, and you just have to go for it. You have to trust yourself, trust your instincts, and that's what happened tonight. To be honest, I played a great tiebreak in the second set. Not too many opportunities really for both of us, and to break the serve of the other guy. That game, when I broke his serve, was probably the only game I was able to break him, and that's what happened. So, all in all, I'm very pleased with the performance, and of course, once again, I want to thank everybody for showing up and really supporting both of the players tonight. And thank you so much.
I was going to ask you if you picked any new Greek words, but you already did. Ευχαριστούμε πάρα πολύ. Πάμε να κάνουμε λίγο θόρυβο για τον Novak Djokovic.
The Joker. The Djokovic. Sorry, I need something. Otherwise, I'm going to fade away. All right, let's just finish this up. It's not too much more. And then we'll watch the inevitable shorting of the stock and lack of buying in Canada. All right, so the next page says Railtown AI Technologies and AIP Partnership, a transformational coming together. Over me. This merger represents a unique combination of 2 Canadian powerhouses in the AI ecosystem. Railtown AI Technologies, a leader in AI-powered developer tools, and AI Partnerships Corp., an established network of over 180 AI-driven affiliates with a proven 400 million annual sales footprint. Hey, la-di, la-di. Hey, la-di, la-di. The combined entity is poised to create a scalable platform that redefines how AI solutions are developed, delivered, and monetized. That's the key, isn't it? Affiliate network transformation. AIP's affiliate network, used in conjunction with Railtown's AI services, creates a first of its kind platform for the AI services business. This transforms AIP's previous B2B, business to business, matchmaking model into a one-step platform for developers' AI needs. AI services growth potential. The newly integrated platform aims to have multifaceted growth potential. On the monetization side, the integration of Railtown's AI service suite delivers the existing affiliate network high-quality AI service solutions and activates ensuing revenues for Railtown. From a growth perspective, the network's expansive nature provides significant opportunity for organic network growth, with new customers further growing service revenues. Strategic vision. By combining Railtown's cutting-edge AI suite with AIP's vast network, we aim to deliver unmatched value to shareholders and customers. This merger empowers developers, enhances customer outcomes, and establishes a monetized marketplace for AI tools. The next page just reiterates all of that, but it's interesting. This is why I wonder if, the other day I was hoping TELUS would put out its own news story. It never did. Maybe it's going to come. I don't know. So I don't know. I don't want to highlight everything on the page. But what they talk about here is a fully integrated market. And at the top, you've got the AI partnership network of over 180 affiliates. In the middle, you have Railtown with its 5 divisions. And at the bottom, you've got the sovereign AI factory run by TELUS. And you see over here, shared compute revenue. It's an amazing model. It's absolutely amazing. I guarantee you these guys haven't looked at it. They don't care. They're just trying to push a short-term bet, a really short-term bet. And they may be trapped too. You don't know. All right, so they're going to build and publish AI agents with AIP. They're going to build Railtrax, Langtrax, agentic frameworks. They're going to deploy TELUS, Bell, Amazon, Google Cloud, and Azure. Wow. and they're going to observe using conductor, agent, manager, and they'll publish in the agent marketplace. All right, I think it's only a couple more. Let's see, one. Oh, that one's thick as a brick. All right, let's just take a break. The last page is a disclaimer. I'll hold it up so you can read it. All right, let me see what your comments are. I don't know if I'm exhausted or I need sugar or I didn't sleep or what. But I've got to make it for another hour and 8 minutes, and I don't know if I can. I'm going to try. All right, so the volume hasn't changed. It's still around 162,000, but they've walked it down another penny. That's your market, all corrupt, all corrupt. But this isn't endless. This isn't hopeless. This isn't going to continue. This is a buying opportunity. And I know it doesn't feel that way. You keep saying it. I understand. But this won't last long. I bet everything else is up. No. What's going on? Fingers down 5 cents at 138. Genius Brands, run by a pure genius, is down. Talk about a narcissist. Of course, I shouldn't give a diagnosis since I'm not a shrink. GNS is down to 75.13. GDC is down 46 cents at 380. QNTM is down 42.5 at $8.57.5. All right, let me see what you're saying because I'm wiped out. Justin, Railtown sounds far superior compared to Langley. So I hope they get the word out and become popularized. You know, the new governor of Virginia worked at Langley. It's right in front of our face. Justin Babish, you say that Railtown is going to get a percentage of the profits from Telus' customers. Well, I didn't say it. I read it. Let me see where it is. Can't find it. Can't touch this. Can't touch that. Can't touch this. Why can't I find it? Sorry, Justin. I'm just late. Justin, I can't find. Oh, here it is. It's under Railtown revenue model. The pages aren't numbered. I should have asked the guy to print it with numbered pages. The revenue model is usage-based and directly tied to the success of AI deployments. For every agent built with Railtown's frameworks and deployed on the TELUS platform, Railtown receives a net percentage of the compute revenues generated by TELUS. That's pretty awesome. It's pretty awesome. Did we just invade Venezuela? What's going on? Why is the whole market down? Strong solar storm slamming Earth today as magnetic chaos threatens power grids across the United States. Well, at least we spent trillions of dollars in the Middle East. A powerful solar storm is currently striking Earth, disturbing the planet's magnetic field and putting power grids, satellites, and GPS systems across the United States at risk. The major G3 geomagnetic storm, this is according to the Daily Hate, started late Wednesday night and is expected to linger throughout Thursday over the northern United States, according to forecasters from the National Oceanic and Atmospheric Administration. While the storm's effects peaked between 1:27 a.m. and 2 a.m. this morning, Eastern Time, NOAA noted that the solar event is still at G2 strength heading into Thursday afternoon. This storm is the result of solar eruptions, including flares and coronal mass ejections, where plasma is ejected from the sun and travels toward Earth, typically arriving a day or two later. G3 level storm considered strong can trigger voltage fluctuations, power grid damage, satellite glitches, GPS disruption, and radio blackouts. Swell. Swell. The volume hasn't changed. How many shares traded at 39? 323, 800, and 100. So 1223 traded at 39 cents. All right, let me just quickly try to get this done before I pass out. Value of technology. Oh, I'm sorry, I got to read this. Justin says, you say that Railtown is going to get a percentage of the profits from TELUS's customers. I think that they may have the exact same kind of structure with Microsoft in the United States. Hyperscaler. Ward Richardson. Light LLM. Large language model. Tebow, I just placed, all right, just placed an order for 9100 rail at 54 cents. That's Canada. I'll play their game. I'll be there, Huckleberry. Tebow, let's see if they push it to 53. Free stock alerts. Free stock, I added 36,280. I hope you're not going to tell everybody to sell, but I believe you. 36,280. 22. That's a great number. That used to be didn't that used to be the president's salary? I really enjoy these streams. I really enjoy your stance on Railtown. Please keep this stream going till 4. How the hell am I going to do that? Steve grabbed another 1,040. Good for you, Steve. It's what you got to do. Free stock alerts by cost basis. That's pretty good. It's darn good. Just imagine if it goes to $4 in the next 2 or 3 weeks, you got 10x. You shouldn't sell, by the way. You shouldn't sell. I think you'll get 100x on that trade at a minimum. Hey Steve, how are you? Free stock alerts. I'm very comfortable with my position. Being only 3% of my portfolio, I'll keep adding the discount shares and max it out at 5%. I would go further, but that's me. I can't imagine there's anything in your portfolio better at this point in time than Railtown. But good for you. I think it's great. What a great position, and that's a great strategy, free stock alerts. All right, so the next page before I conk out is called Value of Technology Marketplaces. Technology marketplaces are transforming the way businesses operate, providing a powerful platform for growth, innovation, and efficiency. I wonder if it'll close in the green today. Bullet point, economic efficiency and growth, lower costs, direct connections between buyers and sellers reduce intermediaries and transaction costs, wider reach. Marketplaces help small and medium-sized enterprises access broader customer bases and boost sales. Faster transactions. Technology streamlines procurement, increasing business volume and economic output. Bullet point, data-driven insights. Actionable data. Marketplaces generate rich insights from user behavior and transactions. Smarter decisions. We all like smarter decisions. Businesses use this data to refine operations, marketing, and product strategies. Predictive power. Analytics enable better forecasting and resource planning. Bullet. Enhanced user experiences. Seamless transactions. User-friendly platforms ensure efficient, frictionless interactions. Trust and security. Built-in protections foster confidence among users. Personalization. Data-driven recommendations tailor the experience to individual needs. bullet. Rise of B2B software marketplaces. Rapid growth. B2B marketplaces are now a leading channel for software procurement. Major market share. They're projected to represent a significant share of enterprise software spending. Simplified buying. These platforms make it easier to discover, evaluate, and purchase solutions. By acquiring AI Partnership Corp., Railtown AI Technologies, Inc. can shift the affiliate network model from connect and resell to a value integrated ecosystem, offering core platform tools, agentic frameworks, and shared infrastructure that enhances every affiliate's product and delivery. So the combined Railtown AIP structure apparently has a competitive moat. I'm going to skip all this because I can't read it to you in any intelligent way. I don't know how to break it down. But they're describing all the interacting relationships, the benefits, they're working together. That creates a barrier to composition. I wonder if they said that it's a right to buy. Let's see. Platform capacity, opportunity to move acquired and non-acquired affiliates who currently spend $120 million a year with various hyperscalers. All right, so who was that? Was that Justin? Imagine that says 120 million. They're going to switch to a common lower cost platform. 120 million they're spending. If you, what? I don't know. I have no idea. What does Railtown get? I don't know. Is it possible Railtown will get this, just from that Railtown will get the same amount of revenue that LangChain is currently projected to have? Only this will be profitable? I don't know. It's pretty exciting. All right, key people. Here's your key people. Up in Canada, they can get away with everyone being white. That's not a problem. All right, Corey Brandolini. We've read all this before. 30 years of experience in high growth software and technology companies. He has co-founded companies in spaces such as cloud storage, content delivery networking, and prop tech. He was involved with Telio, hits a new low, which was acquired by Microsoft. Marwan Haddad, CTO. For a decade, he has led the platform development for Fortune 500 companies, including Microsoft and Starbucks. He's an electrical engineer. And he's a mentorship guy. That's great. Has led platform development for quite a few companies. Dr. Elliot Holtham, he's the CAIO. That is a job that impresses chicks. What do you do? Well, I'm a CAIO. Here's my card. He co-founded several technology startups and worked in quantum computing. Wow. And genomics. He has a degree from Madrid, so he must speak Spanish. Dr. Tom Core, former president and CEO of Ontario Centers for Excellence. Let's see. Previously held the joint positions of president and CEO of the Accelerator Center at the Waterloo Research and Technology Park. And then Pat Horgan, entire professional career at IBM, back when IBM was important. There they are. And then key people, Dr. Eldad Haber, he's from the University of British Columbia, and he's got 20 years experience in developing widely accepted software. He's an advisory board member. Kevin O'Neill, advisory board member, and he's a founder. He's seasoned, and he started at Merrill Lynch. Michael Nobrega, former president and CEO of the Ontario Municipal Employees Retirement System. John Ruffalo is going to be an advisory board member. They're all advisory board members. Founder and managing partner of Mavericks Private Equity. Founder of Omer's Ventures, which he ran for 8 years. And Cameron Schuler. Amy. All right. Railtown's cap table as of August 31, 2025, provided by the company. Issued and outstanding 143 million. The founders of that, the founders have 54 million. and the warrants are 24 million. Employee options are 5.5 million. So fully diluted right now, it's 172 million shares outstanding, fully diluted. And founders, directors, employees, and consultants own 38% of the current shares. And that's your disclosure statement. I'd read it to you, but it's kind of boring. And that's the presentation. I will try to stay on for free stock alerts. I just want to conk out. I want to get away. Tainted love. The Joker is now in 4th place in the world. He's ahead of Ben Shelton, who I know wants to beat him. And he's behind Alexander Zverev, who is talented, but can't seem to break into the top 2. All right, so now what? That's great, free stock alerts. So now what? Hey, Bill and gang, hey. Justin Babish in deals with the data center that have customers that build on Railtown technology. I think Railtown should get 50%. I have no idea. I don't know. I was thinking 5%. It's 10% of that number would be a huge number. That would make, if they got 10% of that number, that would make Railtown better than Langchain. Good afternoon, Donna. Nice to have some news, yeah? Huey Lewis and the news. Let's see if we're at war. Doesn't look like it. Wow. Here's, you want some negativity. But this isn't about Railtown. This is about these big companies. By Tyler Durden this morning. Tonight's price action felt pretty bad. Late in the day yesterday, OpenAI headlines sparked a sell-off in NVIDIA and fade in the broader market as investors digested what AI infrastructure financing might look like if the government acts like a backstop. Let's see, they're talking about something different. Jensen of NVIDIA says, as I have long said, China is nanoseconds behind America in AI. And they've been building out their power system, their grid, their robots, and they've stolen anything they didn't invent. And they've, what have we been doing? What have we been doing? It's vital that America wins by racing ahead and winning developers worldwide. Goldman's Nelson Armbrust said, personally, I don't know who will win the AI. And yes, regulation and funding matter a lot, but I tend to think on the long run, if you have the best talent, you should do better than your competitors. And right now, that is the US, given high-skilled immigrants mostly prefer going to the US to work. China sees massive demand for US dollar bond issuance. Wow. UBS liquidates funds, faces 500 million exposure to First Brands fracas. This could spread. Jeffrey was involved. Having already followed Deutsche Bank into the risk transfer business, hedging its exposure to its own deals. The big Swiss bank has told clients that it will wind down an investment vehicle with significant debt exposure to First Brands Corp. In the first major fund liquidation following the U.S. auto part maker shock bankruptcy. UBS's O'Connor, the once iconic hedge fund associated with the only major Swiss bank left standing after the Credit Suisse collapse, has 30% of its portfolio tied to First Brands, leaving Switzerland's largest bank grappling with a bankruptcy that has convulsed global finance. Overall, UBS has more than 500 million of exposure to First Brands debt. The bank is also liquidating a high-grade fund. We suspect UBS will not be the last to liquidate funds to cover these private credit losses. NVIDIA's NVIDIA's 190 area is a huge and a must-watch, regardless if you trade the stock or not. 21-day and trend channel lows come in here at the 190 area. This is market's make or break area. All right, let me see what I got. Ray Dalio is making a warning. I don't know. I think Congress is going to summon Andrew. Don't you want me? All right, Athens, open. All right, I'm tired. I don't know what else. I guess what I can do, this chapter is not very long. So I can read one more chapter out of The Great Taking. Let me make sure that it's not long. Yeah, it's not that long. It's not short, but all right, I'm going to read chapter 9 of The Great Deflation. That's what it's called. The Great Deflation. Chapter 9 of The Great Taking. Wisdom comes alone through suffering. Aeschylus. I went down to the Cleveland Public Library and paged the old chart books of commodity prices and stocks stretching back into the 19th century. I found that in the 1930s, all commodities, with the sole exception of gold, bottomed at the lows of the prior 60 years. Most public companies ceased to exist. They had gone bankrupt. The shareholders were wiped out. The assets were taken by the secured creditors and the banks selected by the Federal Reserve System. Price levels do not recover for decades. In 1923, Grandpa Rogers, the surgeon who had been in the first U.S. medical unit into the Great War, bought 3 housing lots in Shaker Heights, a new upscale suburb of Cleveland. These properties would have gone up in value through the 20s. In 1929, the stock market crashed. He was probably quite glad that he had not sold the lots and put the money in the stock market. In 1933, when the banks were closed, he was probably quite glad that he had not sold the lots and put the money in banks. In 1952, 3 decades later, his widow finally sold the lots for 1/3 of what Grandpa Rogers had paid for them in 1923. This was not because Shaker Heights was economically depressed in 1952. Shaker Heights was, in the 1950s and into the early 1960s, statistically, the wealthiest suburb in the United States. Wow. In 1905, my great-great-grandfather's coal yard was valued in a bank appraisal at $126,000. A modern industrial building with heavy overhead hoists was built on the property in the 1920s by my grandfather. That became the site of Webb Equipment, the crane and hoist business. After my father's death in 1981, this property, with equipment and materials, was sold for less than $80,000. This after 3/4 of a century. Further confirmation of the persistence of deflation is found in this paper by Tom Nicholas and Anna Sherbina, titled Real Estate Prices During the Roaring '20s and the Great Depression. Quote, using unique data on real estate transactions, we construct nominal and CPI adjusted hedonic price increases for Manhattan from 1920 to 1939. The CPI adjusted index falls during the recession that followed World War I, rises to a local peak in 1926, and declines again following the collapse of the Florida real estate bubble. It subsequently recovers to reach its highest value in late 1929, before falling 74% by the end of 1932 and hovering around that value until 1939. A typical property bought in the beginning of 1920 would have retained only 41% of its initial value 2 decades later, unquote. And this was Manhattan. Consider that in the period from the 1920s to the 1950s, more than 3 decades, there was little recovery in price level. Think of the absolutely massive demand drivers present during those decades. Bullet. Electrification and all it enabled, refrigeration, appliances of all kind, industrial machinery. Bullet. The automobile and the associated build out of the highway system and suburbanization. Bullet. Telecommunications, telephone, radio, television, telewoman. Bullet. Air travel. Bullet. A global war followed by the Korean War and Cold War arms race. Bullet. Population growth. No such drivers of demand are present now. It is quite the opposite. Artificial intelligence and robotics are inherently deflationary. We are told that people are not needed. Perhaps that is a tad deflationary. The inflation we are now seeing is not attributable to strength in the global economy. The underlying intractable problem of our time is not inflation, but deflation. The quote-unquote inflation is illusory. It is created by massive devaluation of money and artificial scarcity. Consider the implications of the Nord Stream sabotage, for example. Perhaps you have heard of the everything bubble. What is it? I will explain the horror of it simply. Let's take the example of a single bond with no fixed maturity date, i.e. a perpetuity. This bond pays a fixed annual dividend of $5. If the market rate of interest is 5%, this bond has a value of $100. If the Fed lowers interest rates such that the market rate of interest for this bond is now 1%, what happens to the value of the perpetuity? The fixed dividend of $5 remains unchanged. As 5 is 1% of 500, the value of the perpetuity goes up 5-fold to $500. Now, if the Fed increases market rates back to 5%, the value of the perpetuity paying a fixed dividend of $5 returns to 100. And hence, there is an 80% decline in value. It's basic arithmetic. The entire global financial complex essentially is a big perpetuity, i.e., a financial instrument with no fixed maturity date. The prices of all fixed income instruments are determined by interest rates, and all equity market and commercial real estate values are similarly driven. The Fed created the everything bubble with the justification of fighting the global financial crisis, which of course the Fed also created by lowering the Fed funds rate from 5% to near zero, and then keeping it near zero for most of the past 15 years. The Fed has now increased the Fed funds rate from near zero in April of 2022 to more than 5% in just 1 year. That the decline in the global financial and real estate markets will be massive has been made certain. The cake is baked. The financial gains of the last 15 years have been an illusion. Some take comfort in thinking that the losses can be hedged in the derivatives market. If that is the case, the losses do not disappear. They are in the derivatives complex. Epic losses will be concentrated on the balance sheets of the CCPs, which, as we have seen, are designed to fail. Some take comfort in saying that the Fed will lower rates again when they are forced to do so. Have you noticed that they are not lowering rates despite the first bank failures? This is just the beginning of such failures, given the basic math explained above. The Fed is sharply increasing rates into economic weakness and a banking crisis. This is exactly what was done in the Great Depression, and they are doing this with the bizarre and cruel justification of fighting wage growth. Obviously, this was written a couple years ago. When the everything bubble is imploded, we will face a deflationary depression. This is one opinion, by the way, may be right, which will span many years, even decades. This coming great deflation is intrinsic to the Great Taking. The architects of the Great Taking have planned and prepared to use this dynamic fully, secure in their knowledge that as night follows day, massive and prolonged deflation will certainly follow the epic debt expansion supercycle which they created. The architects have assured that they alone are positioned to take everything, and that you and your children are positioned on the other side of that, i.e., to lose everything, to be enslaved and even destroyed by it. People will be knocked down and not be able to get up again. That is intentional, as the populace has been systemically encouraged to go deeply in debt. Whom the gods would destroy, they first caused to borrow at low rates of interest. As in the Great Depression, prolonged deflation will assure that people who are in debt will not be able to make payments on their debts, let alone repay them. They will be trapped. All property and businesses financed with debt will be taken. With profound and persistent deflation, assured to stretch over many years, debt becomes a powerful weapon of conquest. Debt is not a real thing. It is an invention, a construct designed to take real things. It is instructive to look at the deeper meaning of the word debt. I almost finished a giant book on the definition of debt. It's not clear what it is, really. The root word is believed by etymologists to be an ancient Proto-Indo-European word, gaba, meaning to give, to hold, or to receive. That would be a good line in a song. It is found, for example, in the Sanskrit gabhasti, hand forearm, the Latin habere, to have, hold, possess, the Old English gaifan, and the Old Norse gefa, to give, and in the present day Swedish gur, gives. What gurs? However, the Latin prefix de, meaning to do the opposite or undo or take away totally and completely, think of the word defrost, utterly negates this giving, having, or holding. Again, according to the online etymology dictionary, the Latin word debere means to owe, originally keep something away from someone. From de, away, plus habere, to have, in medieval Latin, the meaning of habere was goods, capital, investment. The bottom line is that debt has for centuries had the function of dispossessing, of taking away property, capital, and investments from someone. Yeah, I can see that. We can plainly see in their deliberate preparations over decades to take on a vast scale that there will be no debt forgiveness. Ancient societies knew the practice of the debt jubilee, i.e., a comprehensive forgiveness of debts. It was enacted repeatedly in the interest of general human welfare. No debt forgiveness is intended now, but what purpose should the artificial constructs and institutions of society serve, if not human welfare? What must vitally concern each and all of us, if not human welfare? The powers that be have designed an elaborate legal construct to prevent individual states from directing their central banks to create the money to protect the depositors. If many trillions can be created to bail out private banks, the same could certainly be done to bail out the depositors as a social imperative. That it will not be done is a sign of the true intent, deprivation, and subjugation. The Great Reset is anti-human. It is intended to fix in place a system something like feudalism in perpetuity, in which the populace is held in a state of deprivation and fear with the empty promise of safety. Wake up. We have been living within a protection racket in which the protectors terrorize the protected. Those supposedly protected us from the bad guys are the bad guys. All right, so that's the end of that chapter. Tomorrow we will read the conclusion. Then we'll go over the prologue, and then we can talk about the book. There's 14 minutes to go. The previous close was 40 cents. I'd say there's a 50% chance the stock goes green today. The volume now shows 24,530 shares. So it kind of gives, to me, it gives away the fact that those higher numbers were all fake. Although somebody bought up in Canada some shares. The last two trades were 500 and 500 at 39. And now the ask is 39.5, so maybe it won't go in the green. Norway to send $7 billion to enrich Zelensky. Norway to send $7 billion to Ukraine. Everybody is sending funds ahead of 2026. New York City falls under socialist control. I don't know. We'll see. Federal judge overrules EO the executive order requiring voter ID. I think that's a woman that did that, an older, yeah. U.S. District Judge Colleen Kolar-Kotelly ruled that it is unconstitutional to require voters to show proof of citizenship. I'm not going to even read more of that. It's insane. That is insane. Who's going to replace Nancy Pelosi? Her daughter. Her daughter's going to replace her. All right, we've got 11 minutes. I'm just trying to write it out because I am knackered. All right, we got 10 minutes to go. 3876 by 39.5, 3,174 by 15,000. Volume's only 26,360 according to Morgan Stanley. Last trade, they just simply had to sell 1,826 shares at the bid, 38.76. And again, they did it twice in a row. Another 1,826 at 38.76. That's coordinated, it's communication, it's illegal, but no one cares. Fingers down 5 at 138. I think there's an interview today, right? Thursday? The bid is 137, the ask 139, 219,000 shares. Anyway, everything else is still in the red. I'm not going to read them. Uh-oh. Somebody collapsed at the White House. The DOJ lawyer who threw a sandwich at a federal officer is found not guilty. It's still 8 minutes. How much more of this torture can I stand? How much more? Trump Supreme Court reinstates Trump's administration's transgender passport policy, according to The Hill. They're cutting so many ads. They're cutting 40 airports. Anchorage International, number one. Hartsfield, Jackson. I guess this is alphabetical. So it's Anchorage, Atlanta, Boston, BWI, Charlotte, Cincinnati, Dallas, Love, National Airport, Denver International, Dallas, Fort Worth, Detroit, Newark, Fort Lauderdale, Honolulu, Houston, Dulles, Houston Intercontinental, Indianapolis International, JFK, Reed International, LAX, LaGuardia, Orlando, Chicago, Memphis, Miami, Minneapolis, Oakland, Ontario, Chicago, Portland, Philadelphia, Phoenix, Sky Harbor, San Diego, Louisville, Seattle, San Francisco, Salt Lake, Teterboro, Tampa International. It's a lot of carnage. Let's see if there's any news out there today. I'm really having a hard time. 5 minutes. I think 5 minutes is going to be hard. It's going to be hard to make it through 5 minutes. All right, Eric. 10 more in Canada. Good for you. And that's a great price in Canada. Let's look at it. Let's look at how Canada is trading. Um, the CSE. Oh, the C's missing. I see. CSE. There we go. All right. Let's see what it's doing. The volume today, 90,055 cents. There you are. CIBC and Anonymous. Three minutes to go. Finger is down 4.5 cents, 138.5. Railtown is down almost a penny at 39.19. GNS is down pennies 0.6, 73.99. GDC is down 45 cents at 381. QNTM is down 31.34 at 868.66. 2 minutes to go. I can't wait. It's 38.76 to 39.88, 39.85, 39.87, 39.81, 39.79. They just want to show you that there's a lot of stock for sale, but there isn't. The previous close was 40 cents. They don't want it to go over there. But the ask is higher than the close. Is something brewing with 1 minute to go. Doesn't look like it. 0.399999999. 0.3988. So frustrating. But it's a great time to buy. Eric did a great job. Deschamps did a great job. Sam Guest, Free Stock Club, Steve, account setting, Eric B. I don't know if I called everybody out. All right, less than a minute to go. It doesn't look like we're going to get it into the green. The ask is 38.76. No, the bid is 38.76. The ask is 39.73, 39.72, 39. Yeah, they're not going to let it show any green. Although the ask is now over 40 cents, but they're not going to let it do that. Now it's under 40 cents. So I think we've closed at 39.76. The volume is 26.48. Eric B., you sound like an auction guy. Yeah, and you bought it. If the system is flawed in algos trade, how can retail? They can't. They can't win. You can't win. That's why we have to get away from all these stocks. Railtown is different. Railtown's not an over-the-counter stock, John, and Railtown is a Canadian stock. My opinion, there's only four maybe, but there's only three possible reasons why buying has not come in Canada in Railtown. Number one, the AIP deal has not closed. And to the extent that buyers maybe signed agreements not to buy if they knew that information, if they did, or if they were insiders, maybe that is a critical part before whatever that subset of buyers is, before they can buy. That deal hasn't closed. It hasn't been filed. Secondly, this TELUS deal, I don't know. Maybe there's more to come with that TELUS deal, and maybe some buyers are waiting to see what that is. I don't know. That's pretty weak, but it's possible. It could be that some of these bigger buyers cannot buy under $1. So it's going to rest on retail to start buying. But like most of us, we're maxed out. But up in Canada, research reports could have a real impact on the price. But I think, although this presentation I think is fantastic, I think the issue is no one really understands the path to revenue. I showed you that Langchain, call it 15 million. If you took what was in that presentation, they said that there's 120 million that these companies, the AIP companies, are paying for AI. I mean, if you took 10% of that as Railtown's piece, I don't know if that's fair. You're basic, and it's highly profitable, I'm sure. You're basically at the value or better than Langchain. I think the only thing that needs to be done is the story needs to be told. And I don't think it's really gotten around yet. I think we've got a good start on it. But one of these days, one of the funds is going, wait a minute, Langchain is new. They only work with 1 or 2 companies, and they're still in beta on some things. You're battle tested, you're first to market, you're best in class, and you got to deal with TELUS and this and that and that and that, and you've got this network. You should be trading more than Langchain. Well, all it takes is one institution or 2 to see that, and you're going to see the stock up. Now, the question is, I used the 1.2 billion here, and I used 222 million shares outstanding, and it came up with a US target of 562. But if you use a higher number of shares or a lower number, you get different prices. So that's the question. But I think it's quite logical to assume that the marketplace recognizes that Railtown is equivalent to or better than Langchain, and they credit Railtown before Railtown finishes this offering, and you might see a higher price. Maybe temporarily, you might say. But there should be other revenues, I think, starting to flow. It's a really interesting time. But of course, the shorts, they do it every time. I don't know why we get surprised. Every time there's good news, they sell it off. Every time there's bad news, they sell it off. Every time we get despondent, they sell it off. Every time we get exuberant, they let it run up a bit and then they sell it off. The shorts have one strategy: sell, destroy companies, destroy market caps, be greedy. Well, that's all you're seeing here. It's not telling you anything about the stock. And it's time to be aggressive in buying it. You know everything. It's in the presentation. It's in the news releases. It's in the comparables. The comparable stock is Langchain. And Railtown's better. But anyway, I'm not mad. I'm just tired. I think what I'm going to do at 4 o'clock. I'm going to sign off because I'm wiped out. I appreciate everybody signing in, and you know, we have to continue to pray for peace in the world, and I certainly pray for peace in each of your lives. Justin says, one way to look at it, with the record date on Monday and the deal not finalized, huge investment positions not purchased in time to influence the vote. Yeah, but I think, you know, you've got Rebecca stating that they acquired AIP. You've got the CEO of AIP, Dr. Kaur, telling in a presentation there, I mean, he didn't come out and say we're required, but he described what's going on as if they're required. You've got this presentation I just read to you, presuming they're required. That deal's done, Justin. There's the acquisition is finished. It just hasn't been filed. I don't know if that's because attorneys had better things to do, the attorneys didn't get paid, or maybe Dr. Tom Kaur is making sure that his vote is unanimous and he's extending that courtesy to the, you know, stragglers in the vote. I don't know. But make no mistake of it, that AIP deal is finished. Justin Babish, this way somebody doesn't come buy 50 million worth of shares trying to vote for the takeover company, so they won't sign the deal. It's an after the record date, you mean? I mean, if somebody bought $50 million worth of the stock, you know, the stock would be 15 bucks. The whole market cap is 60 million. So I don't know how likely that scenario would be. John, with that interview, it sounded like they were in no hurry to add companies, which I think is good, John. I think you're right, and I think that's good because you don't want them adding companies. Look, the whole shorts, their strategy, the whole strategy they have, it's in these documents. They've announced they're gonna roll up companies to get revenue. What's the short strategy? They did it with MULN, MMAT, every company you've ever heard of. They do it. Their whole strategy is to sell the price down, so when it comes time to negotiate the roll-up, Railtown will have to issue hundreds and hundreds of millions of shares to satisfy the CEO. That's their whole strategy. It's not going to work this time. It's a bogus strategy. They don't know it because they don't read anything. Their computers see that they're going to roll up and acquire, so keep the price down. That's our way out of our trap position. It's not going to happen this time. Why? Because, I mean, it's here in this presentation. There's revenue coming. Railtown doesn't need financing, number one, and it doesn't need to roll up any of these AI companies to establish revenue. It's already got the network going with the AI companies. All they have to do is use their framework up on it, according to this thing I just read to you, use that up on their TELUS data center and revenue flows. And they said those 175 companies spend 120 million. It says it right in here. You can look it up. 120 million on AI. If they move that to TELUS, how much does Railtown get? Do they get 1 million, 2 million, 5 million, 10 million, 20 million? We don't know that. But it's revenue. They're active now. It's revenue now. Railtown doesn't need to roll up the AIP companies to benefit from that alliance with AIP. They can wait to roll up the companies for when the stock's trading at 3, 4, 5, 6, 7. So the strategy by the shorts is gonna hoist them by their own petard. It's a puny plan. Such a puny plan. Kneel before Zod. So anyway, John, I think it's great that they're going to take a while, because if they bought, how much would they have to pay to buy, 25 million in revenue at 44 cents? I don't have no idea, but it might be 100 million shares. That's what the shorts want. They want to destroy any per share value. And this is allowed by Ann Wagner. It's allowed by the SEC. It's allowed by Adina Friedman. It's allowed by Chuck E. Cheese Crawwell. It's allowed by Congress. It's allowed because it's in the interests of Goldman Sachs, Citadel, I assume Vanguard, BlackRock. It's horrible, but that's what they do. John, as they acquire, John, are you just intentionally trying to be blockheaded? Do you think, John, when companies acquire other companies, like, what's a successful acquisition? A bank acquires another bank. Citibank bought Travelers. Do you think when they do that, some of the companies acquire other companies without issuing shares? And do you think that's always dilutive? What the hell? Issue shares dilutive. I only can think linearly in one way. If a company issues shares, that's dilutive, isn't it? I read it on all the Twitter boards, and all the boo birds say if they issue shares, it's dilutive. Look, it's dilutive if you work, if two CEOs continue to pursue a deal after their stock price is destroyed by the sale of stock that doesn't exist, and they just walk it down, and the CEOs continue to pursue that deal. And so instead of issuing, I've given you that example so many times, John. If two CEOs agree, CEO number one is going to buy CEO number two's company, the stock is trading at, I don't know, $5. They agree, I'm going to issue 10 million shares and we're going to buy your company. The shorts get going on it. The stock goes to 50 cents. Instead of issuing 10 million shares, they're going to have to issue 100 million shares or more. So those two CEOs face a choice. Do we go through with it or not? In that case, if they go through with it, that is dilutive. Because it's the same shit, whatever the story is, it's the same shit they were going to buy for 10 million shares, they now have to buy for over 100 million shares. That is dilutive. But that's not going to happen here, John. It's not going to happen here. It's what the shorts hope happens here. It's not going to happen here. Oh, well, I guess I have to go through this whole presentation to find the page. I guess I got to go through the whole thing. I read it to you, but it doesn't register with John. He only can think of one word. More shares means More shares means dilution. That's all John can think of. I guess he never tried to buy a company or grow a company or buy talent. All right, here, is this it? Okay. So John, I know new words are probably tough to learn when you're trying to scare everybody. But here's the AI Partnership Corp at a glance. You see that? You see it, John? I'll read it to you. AI Partnerships, the business overview. It's an affiliate network with over 180 AI software as a service companies. They chose the companies with a highly scrutinized requirement set. It was based on financial performance measured to financial goals, synergies with other affiliates, and recurring SaaS revenue models, user productivity, and efficiency. The affiliates serve 5,000 companies, and they're going to cross-sell, and they're going to use those 5,000 companies are going to use Conductor. And it looks like they're going to use it on TELUS. That's not dilutive. And they'll do that even if they don't buy any of these companies. Why? Because Railtown now owns the affiliates. So your attempt to scare people into the idea of dilution isn't going to work this time. All right, they've already identified 3 to 5 shortlisted acquisition targets from the affiliate network, which is going to leverage prior experience working with those companies. The strategic plan is to acquire early stage AI companies at a discount, John, at a discount. What is that? It's accretive. Accretive. So you're saying their acquisitions will be accretive in terms of cash flows, revenues, margins, and value to shareholders? It's going to be accretive. Accretive, not dilutive. So your scare technique isn't going to work. So the strategic plan is to acquire early stage AI companies at a discount and optimize costs across the acquisitions. Summary. AI Partnership Corp is a global affiliate network of AI as a service-based companies. AIP has an established network of over 170 affiliates with a combined approximate 400 million in revenues, John, and over 5,000 end user companies. Investment highlights, John. What's the headline right there, John? What's that headline right there? Right there, what's the headline? Accretive strategy. How can they pursue an accretive strategy if it's going to be dilutive? Maybe they haven't done a toxic financing with one of your friends. Maybe they've been in the software finance business before. Maybe they're going to wait to roll up the companies until the stock price is higher, even though you all are trying to drive the price lower because it's the only thing you know how to do. You have one tool in your toolbox. And you have to open the toolbox when no one else is looking because your tool is smaller and thinner than anyone else's. Accretive strategy. Premium for public SaaS companies provides a platform for discounted private company acquisitions. Well, if they're buying them at a discount, isn't that dilutive? If you buy something at a discount, is that dilutive? So if we bought these companies in the public market, we'd have to pay a premium. But because they're private, we can buy them at a discount to public valuations in the software space. I got to think about it. Is that dilutive or accretive? If I'm paying a discount to the market value, is that dilutive or creative? Yes or no? Can I put some fear and uncertainty and doubt in these shareholders' minds? Yes or no? I'm going to try it because the only tool we have may be short, but it sure is thin. So the accretive strategy, as it's described here, currently there's a premium for public SaaS companies, which provides a platform for discounted private company acquisitions, supporting accretive cash flows. So if I issue shares and it adds cash flows to my company at a greater per share number after I buy that company that I'm currently receiving, is that accretive or dilutive? I mean, the people on all the Twitter and all the people that come in and say that William's a crackpot, they say when you issue stock, it's dilutive. Hey, you're issuing stock, ipso facto, it's dilutive because they've never studied anything. Probably like you haven't studied finance or raised. I don't know what your status is. So the investment highlights, they have an accretive strategy. The premium for public software as a service companies provides a platform for discounted private company acquisitions, accretive. Supporting accretive cash flows, accretive. Opportunity to realize synergies across revenue, costs, valuation, and growth velocity, accretive. I know what the problem is, John. You think accretive is just another word for dilution. Let me give you a definition of accretive. Accretive, according to the Oxford Languages Dictionary, accretive. Oh, this is about shoreline erosion. So it's used in well, I'll use it how it says it. Characterized by gradual growth or increase. Despite the accretive sediment measured, there is a clear shoreline erosion. Astronomy, characterized by the coming together and cohesion of matter under the influence of gravitation. So they're obviously using a word in finance again. All right, Investopedia, understanding accretive growth in finance. Definitions and examples, John. What is accretive? In both finance and in general usage, the term accretive is the adjective form of the word accretion, which refers to gradual or incremental growth. For example, an acquisition deal may be deemed accretive if the deal contributes to an increase in the acquiring company's earnings per share. Well, it says right here under investment highlights that they're going to use an accretive strategy. I guess John just knows, hey, they're issuing shares, ipso facto, it's dilution. Yes, no? I just get so sick of the FUD. I really get sick of the FUD. In corporate finance, which you've never studied because you learned how to just sell stock. That's all you know how to do. Sell stock, sell stock, sell stock, sell stock, sell stock, sell stock. In corporate finance, accretive acquisitions must add more value to a company than the costs involved. This can occur if the newly acquired assets in question are purchased at a discount. Well, wait a minute. Let me see what it says here. The premium for public SaaS companies currently provides a platform for discounted private company acquisitions. Let's see, in corporate finance, accretive acquisitions must add more value to the company than the costs involved. This can occur if the newly acquired assets in question are purchased at a discount. Or if the assets are expected to grow as a direct result of the transaction. Well, let's look at that. The combined Railtown AIP competitive moat. Why don't we run through it, John, since you're so dunderhead? I skipped all this. Maybe I shouldn't have skipped this page. So number one, network effects. So the combined Railtown AIP, one benefit, network effects. It gives end user access to the growing network of 170 affiliates. In other words, the companies that come to Railtown AI have access to 170 different AI products. It allows for cross-selling by affiliates to the 5,000 plus end users, including Railtown Conductor and related products and services. So let's go to this definition. In corporate finance, accretive acquisitions must add more value to a company than the costs involved. This can occur if the newly acquired assets in question are purchased at a discount, or if the assets are expected to grow as a direct result of the transaction. Okay, one benefit is the network effects. the end users now can avail themselves of the product suite of 170 plus companies, but more importantly, the affiliates can cross-sell. They're all inside of Railtown, and they can use Railtown's conductor. Railtown's conductor becomes the platform for 5,000 plus end users. That sounds like it meets the definition. The assets are expected to grow. Okay, let's go to the second benefit of this tie-up. The affiliation provides proprietary enterprise application software. Okay, so obviously, particularly in the case of conductor, there's a moat around the deal because Railtown's product is proprietary. High switching costs, stickiness to move to alternative application softwares. So the idea being, once they put this together, it's going to be troublesome and expensive to move elsewhere. So that's a benefit of the link up, but I'll leave that one as neutral. Brand recognition, number 3. The 170 company affiliate network and its 5,000 plus end users provide a significant branding opportunity. Consistent unified messaging to current and potential end users recombined allows the offering of all affiliates. I would say that meets the definition of gradual growth, but I'll call that a neutral for now. Access to capital. Number 4, access to capital and publicly traded shares to facilitate affiliate acquisitions and organic growth. That's where you're calling people, John, to your strategy. Your strategy is to drive the price down, because when they go to acquire affiliates, they'll have to issue more shares. So the benefit per share is damaged, therefore dilutive. That's your strategy. But this strategy also, if they do it correctly and they don't follow your path, it also provides the ability to scale quickly, which means bring in more revenues. I'm going to give that a net accretive box, is a net accretive. Why? Because they're not going to buy any of the AI companies at 40 cents a share, or at 39 cents a share, or at 35 cents a share. Whatever you try to get it down to, they're not going to buy AI affiliates at that price. They're going to wait till the stock is $3, $4, $5, $6, $7 before they buy those shares. But in the meantime, they can cross-sell, and they can, as I just read in the other part of this presentation, when the AI affiliates move their business to the TELUS site, it says there's a revenue sharing deal. That's accretive. That doesn't exist right now to Railtown. Railtown gets none of that. That money now goes to, who knows, Microsoft data center. That's all coming into the umbrella of the Railtown /AIP. That, my friend, is massively accretive. Number 5, patented AI, patented intellectual property of Railtown, patented intellectual property of the affiliates. That doesn't impress me, never has. Number 6, platform capacity. Now listen to this, John. Opportunity to move acquired affiliates and non-acquired affiliates, all part of the network, opportunity to move acquired and non-acquired affiliates who currently spend, listen to this, John, this isn't in any of the numbers, who currently spend approximately $120 million per year with various hyperscalers the opportunity exists to move acquired and non-acquired affiliates in the network to a common lower cost platform. Who do you think that is? Who do you think that is, John? Who do you think that is? See that? Shared compute. Shared compute. The top is the affiliates. The affiliates go through conductor cloud, conductor DPE, conductor RCA, conductor RAG, and conductor ADK. They all are housed at the sovereign AI factory run by TELUS. That's all new, John. So I'll show it to you. I'll read it to you again. Opportunity to move acquired and non-acquired. That's 170 affiliates. Who currently do buy AI compute power from other hyperscalers. The opportunity is to move those to TELUS, where Railtown has, John, I know you're slow. I know it's gonna stick in your head that this is somehow dilutive because you're just stubborn. You see this over here, John? You see this over here, right here? You see TELUS over here? You see this over here? You see conductor all here? You see that's all combined? You see what that says right there? Shared compute revenue. Do you see who they point to? They point to conductor and to TELUS's factory. Do you see that right there? That shared compute revenue. It doesn't happen right now. It goes to other hyperscalers. But because of this combination, John, that revenue gets added into the pot. You know what you call that? Accretive. Accretive. You might even add the word rapidly accretive. But let me show you this. Do you see the size of what these 170 companies currently spend? No, because you want to be stubborn. The 170 plus companies currently spend $120 million per year with various hyperscalers. All right, John. I know you want to scare people about the only word you know how to use, dilution. But let me show you something, John. Let's assume all of that 120 moves over. Why? Because the whole network is now owned by Railtown. Why? Because they bought AIP. Why? Because they want access to the network of 180 companies. Why? Because they can bring the revenue that they can bring in-house, the cost that the AIP companies are paying to other companies, they can bring that in-house, not in total. They can bring it to TELUS, and they have a revenue sharing agreement with TELUS. So instead of having a cost, 100%. They have a cost, sure. It goes to TELUS. But they get something in that revenue sharing agreement. I'll use a number just because I'm the slowest person with math in my head. Let's say they get 10% of that revenue. It's 120 million being spent. And let's say for simplicity, they come over to TELUS, it's 120 million spent. The 120 million goes to TELUS, not to Microsoft or some other hyperscaler in Texas. It goes to TELUS, 120 million. TELUS loves it. They got an empty factory up in Quebec. They love it. So they're glad to pay 10% or whatever it is. I'm using 10% because it's easy arithmetic. Now, what happens when those companies put themselves at or host themselves, their AI, at TELUS? They don't stop growing. They don't go down. This is the hottest space in the world right now. They grow. So the 120 million is going to grow as the cross-selling goes on. The compute power gets used up. So let's just use 10%. Over the course of the year, that 120 million is going to get bigger and bigger and bigger. But let's just use 10% of 120 million, John. That's $12 million. Do you think it's expensive? What is Railtown doing for that $12 million? Are they sending linemen to work on TELUS's lines? Are they sending TELUS repairmen to TELUS customers' homes? Are they going in to maintain NVIDIA bricks? Are they maintaining the air conditioning in the TELUS AI factory? What exactly is Railtown doing to collect whatever the revenue share agreement is? What are they doing? What is their offsetting cost line, John? You can't think of anything? I can't either. I cannot think of anything. It sounds like a pretty high margin business. So that's 12 million. It's 10. I'm just using that. It might be 5%, but just for simplicity, I mean, it could be 15%. I don't know. I really don't know. But using 10%, they bring in 12 million, John. High margin, John. Growing, John. That doesn't exist, John. And for that, they haven't issued any shares yet. They haven't issued any shares yet. They just bring the 107. They control the network. They bring them on board. It might not happen all at once, but it'll happen. It'll happen. And that's just starting out. That revenue is going to grow, John. They're not issuing any shares. Now, what if they acquire? I mean, it says right here. I guess I got to show it to you, John, because you want to scare everybody. So here's their acquisition plan, John. I don't know if you can read that. Identified 3 to 5 shortlisted acquisition targets. So they've identified 3 to 5 shortlisted acquisition targets from the affiliate network. Do you think they picked the worst ones? The boring ones? Do you think they would pick the ones that are going to harm Railtown Story? Or do you think, John, they picked the ones that are the most exciting to them? Perhaps there's an aspect in it that it's the ones that they keep using this stupid word I hate, synergistic. Maybe it's a combination of exciting and synergistic. But it says here, John, that they've targeted 3 to 5. Now we'll continue reading here. The strategic plan to acquire early stage AI companies, John, at a discount. Let's go back to the definition. In corporate finance, accretive acquisitions must add more value to a company than the costs involved. This can occur if the newly acquired assets in question are purchased at a discount. So the strategic plan to acquire early stage AI companies at a discount and then optimize costs. What does that mean to you, John? Optimize costs. Improve revenues, yeah. Improve margins, yeah. That's accretive. It's accretive. So they've already identified 3 to 5, John. What benefit would they get by buying those? In my example, in those 3 to 5 companies, Railtown, with AIP included, are already benefiting 10% of the revenue spent or the cost spent to TELUS. They're getting, in my example, I don't know what the deal is. I'd love to see it. But they're already getting 10% of the cost those 3 to 5 companies are spending to house their AI. What does that leave? That leaves, see, I don't know how much in each of those companies the cost of payment to TELUS to house their AI is of their total revenue. But let's say it's 50-50. Well, if Railtown's getting 10% of 50% of the revenues, because 50% of the revenues go to the cost, that means 5% of overall revenues are coming into Railtown, but there's 50% going to the affiliate. If they buy it, John, they bring in that 50% too. So here's a company that can not only buy private companies at a discount, that's the strategy, and that's the strategy they learned with Constellation Software. They can also benefit from the revenue that TELUS earns to offset and to sort of lock in benefit for shares issued. So they can issue fewer shares than otherwise if they were out on their own in a public environment. They're issuing fewer shares. They can, in my example, they bring in 55% of the total revenue to AIP in that example, and they issue shares at a discount. And why does the private company do it? Because they give them bonus targets, and the private company wants an exit. And John, if they do it, let's pick a number. What if they do it they decide we will acquire these companies in January when the stock is $5. The stock today is 40 cents. Do you, John, think that that would be dilutive? I really wish that you wouldn't try your ploys, and maybe you're not one of those people, but whenever these shills come on, they use the same attacks over and over. It's going to be dilution. It's not going to be dilution. Remember, John, if indeed you own shares, remember one thing. Corey Brandolini owns those exact same shares. Marwan Haddad owns those exact same shares. That's something else I showed you. I guess I just have to go over this presentation in more detail. I'm not making anything up. I guess it just doesn't stick with you. There you go, John. Shares issued and outstanding are 146 million. Founders and directors own 55 million. Why would they dilute their own shares, John? Why? Issued and outstanding as of August 31, 143 million shares. Founders and directors have 55 million shares. There's warrants outstanding from financings of 24 million. Employee options are 5.5 million. So when you add those two together, it's 60 million of the fully diluted 172 million shares are and warrants are and options are owned by the people making the decisions to acquire AIP. Founders, directors, employees, and consultants, that's not me, I've never earned anything, own 38% of the current shares. Let's go back assward. PCB Reynolds is saying I trigger easily. I've had him in full meltdown mode a couple of times when he was painfully wrong about MMTOP. Now he never talks MM. What was I wrong about MMTOP? As far as I can tell, I've been right about MMTOP. There's no settlement. It went the legal route. But PCP Reynolds, I never saw you walking the halls of Congress. I never saw you meeting with senators or congresswomen. I did, over and over again. So I don't remember being painfully wrong on MMTOP. Raw Dog, I do think John's question is valid. A few of my buddies and I were asking the same question. All right, let me try to answer it. Let me try to answer it differently. Problem is, I don't know. I do not know any revenue numbers. We saw a cost number of 120 million. I don't know I have to just make up examples. But they've targeted 3 to 5 companies out of 170. We do know those 170 companies do 400 million. And I could do the 80-20 rule, raw dog, or I think it would be more conservative just to take the 400 million. It'd work against my story, in other words, and divide it by 170 evenly. That's 2.5 million. I'm going to round it up to 2.5 just to be, it's 2.3529 million a company. I'm just going to round it up to 2.5 million. So let's say, raw dog, that Railtown is able to roll up 3 to 5 AIP companies at a discount. Let's just call it 5. Let's not say 3 to 5. Let's just call it 5. They roll up 5 AIP companies, and they're each doing 2.5 million in revenue. That's 12.5 million. And for the time being, well, I don't know. I think you have to include the revenue sharing, but we don't quite know what that number is. So we'll ignore it for now. So let's say they roll up 5 AIP companies at 12.5 million, and I don't know, let me just try a number. I don't think it's going to be feasible. Divided by 5. No, that won't work. So, I mean, to go to you and your buddies asking the question, if they paid full price, and I just don't know. But if they paid, say, 50 multiple, you could expand the number of shares outstanding to 350 million. Let's do that. Why don't we do that? We'll just use, I don't think this will happen. But why don't we say they pay 50x, which I don't think they'll pay, so that equals I'm going to say this is the worst case. I'm trying to come up with the worst case. So the issue so if their first deal is 5, they're going to roll up 5 companies that are doing 12.5 million combined, and they pay 50x. That's not a discount, but let's just go with it. That's a market value of 625 million. And if they use $5 a share, they're going to have to issue 125 million shares. Now, is that dilutive? Well, I think they won't blow their wad on just that. I think that's all the amount of shares that Corey ever wants to spend in an acquisition. but I'm going to the very worst, the very extreme. So if they do that, all of a sudden you have 350 million shares outstanding. Remember, the affiliate I just showed you that the affiliates are spending 120 million, and they're going to bring that on to TELUS, and they're going to revenue share. I don't know the numbers. So if they did 10%, that would bring on 12 million. Obviously, if they did 5%, it'd bring on 6 million. High margin. But let's just pretend that doesn't exist. Let's just ignore that. Let's say that Railtown doesn't sell any conductor at all. This is it. This is just it. One trade. All right, so what would $12.5 million in revenue be worth when you compare it to Langchain, who's doing somewhere between, how many messages are here? Too many. So I can't go back into it without losing messages. So I can show it to you to back myself up. You need proof of everything. And that's not wrong to want to see proof. I've just shown it to you. Okay. Langchain generated between 12 and 16 million dollars. Do you see that? Langchain generated between 12 and 16 million dollars annualized. Annualized. Forward, annualized as of June. And Langchain was valued, I don't know if you can see that, at 1.25 billion. 1.25 billion. All right, so we're going to assume, in the most dire example possible, that this is the only revenue. They expanded their shares to 350 million. And I'm going to make the assumption that they can raise money, or their valuation will go. Langchain, a startup that helps developers build artificial intelligence agents, has raised 125 million in funding at a $1.25 billion valuation. According to TechCrunch, Langchain generated between 12 million and 16 million in annualized recurring revenue as of June. So I'm going to make this decision, the assumption that these 5 companies come out of the gate doing 12.5 million revenue, but it's going to grow. So it'll be between 12 million and 16 million annualized. So I think the company then would be valued at 1.25 billion. All right, Raw Dog? I'll show it to you. I think that bit of it is easy to grab. So 1.25 billion divided by 350 million shares. The absolute worst dilution. That's not going to happen. Well, it's not good. So that deal wouldn't get done. That works out to a per share price at 1.25 billion of 3.57 a share. So that deal would be dilutive. If they issued 125 million shares at $5, that would be dilutive. But I don't think that's what'll happen. But I'll show it to you. It just doesn't work. If you assume the company buys 5 companies and they're only doing 12.5 million, I'm sure they'll do more than that, and that creates a 1.25 billion, and they issue 125 million to get that done. It's dilutive, 3.57. So that wasn't. I don't think that's a good example, but I'm trying to think another way of showing it to you. I assume the stock's at $5. So what would get the stock to go to $5? I left that out. To get the stock to go to $5, as is, before they buy those 5 companies, and if you use Lang Chang as a comp, what number of Lang Chang generated 12 to 16 million. Let's use the high number, 16 million. Let's not go in between. So if Lang Chang is going to generate 16 million, and that justified a $1.25 billion multiple. I mean, it's an obvious answer. That's a 78 multiple that they're using for that valuation. But obviously, if we use that to get to a $1.25 billion valuation before they acquire any of the AIP companies, they've got to generate, using that multiple, they've got to generate $16 million using that multiple. Well, if we do that, we know there's currently fully diluted, I'll use their number, they're saying there's 172.5 million right now fully diluted. And we know the AIP deal hasn't closed quite yet, but we know it's going to close. So 172 plus 50 is 222.5. So let's divide 1.2 billion by 222.5 million shares. That's $5.06. So using that as a comp, we've got Railtown would have to get to 16 million in revenue out of the gate. I can't think of any revenue sources out of the gate that I know about. We know they have the revenue sharing deal with TELUS, but we don't know how long it'll take to set up. We know they've announced 5 or 6 revenue deals minus the revenue. So how can I show you that Railtown will get to 15 or 16 or 20 million in revenue quickly without AIP? I don't know how to do it. I don't have enough information. But if you expand the time frame a little bit and call it 90 days instead of quickly, I think the sources of revenue for Railtown are clear. It's going to be a percentage of that $120 million spend that I just showed you. What should we pick? I don't know. You want me to be skeptical, so let's say in 90 days, they move over a lot of it. And let's say instead of 10%, let's call it, that's 12 million. Let's call it 5 million, that's 6 million. Let's just say 3 million. They get 3 million from revenue sharing at the end of 90 days. And then you've got Conductor cross-selling. That's the platform everybody uses. We know from Dr. Tom Core's we know that on average the companies are doing 2, 3, 4 million each that's in the AIP side. But how much could Railtown's Conductor benefit from that in 90 days? I just don't know. Raw Dog, you're right. I don't know what the revenue will be from Railtown. So so your point, I guess, Raw Dog, and I don't know if it's the point you're making, is that the shorts are going to be successful by driving down the stock price, say in Canada to 25 cents, such that if Railtown is going to buy the AIP network, they're going to have to issue 200, 300, 400 million shares just to get revenue. That's what you and your buddies are concerned about. I don't have enough information to prove the opposite to you. All I can tell you is I've been assured they're not going to issue stock at 40 cents or or 25 cents in Canada. They're just not going to do it. So the question is, how do you stop the selling and the doubt that you and your buddies and John are bringing in, when I cannot answer the question of how much revenue is Railtown going to be doing prior to acquiring AIP affiliates? I can only think of three sources of revenue. I don't know if I'm missing one. I guess new or other. But what else could I be missing? So I think the only revenue that Railtown could get, they've already announced 5 revenue deals over the last few months without revenue. So that might be fruitful. We know they're going to do revenue sharing with TELUS. We just don't know what that's worth. Although some percentage of 120 million, it's going to be a big number, I guess. Well, I don't know how big. Could be 5 million, I guess. I don't know. Cross-selling with 5,000 companies as the end users at AIP, I think that's fruitful, and that's regardless. That's regardless of rolling them up. And then other revenue deals that might be pending. Those are the only sources of revenue I can see that Railtown will go after. And Railtown needs to get those perhaps to 20 million. To get that to 20 million, if they achieve the same multiples, maybe gets the stock to $5. I don't know. Basically, I guess I'm assuming 5 million from each of these sources gets me to 20 million. Well, now that changes the scenario I just gave you before, where if they issue 125 million shares at $5 to acquire those 5 companies, well, then the revenue isn't 12 million, 12.5 million, it's 32.5 million. Yeah, I don't know what multiple to use. I guess use 75. And just to compare it, we can do it at 50, I guess. $1.6. I think this is the absolute worst deal they'd ever make. I don't think they're going to issue that many shares, but let's see what these do. If you divide this now by 350 million shares, and if you divide the first one by 350 million shares, which is not going to be what it is. So in a really bad scenario, I think if they increase the amount of shares to 350 million to buy those 5 companies at $5 a share, it would imply that you already had some revenue. So at 75x, that becomes $6. It's $7 a share. But at 50x, it's not as attractive. It's only $4.64. But I'm not including all the revenue from the revenue sharing deal. I have a small amount here. I just think raw dog, it's very difficult to come up with a scenario. All I can tell you, they're not going to dilute the shares. I tried to go to the extreme, and I think even the worst case is kind of a push, but the multiples have to stay high. Another way to look at it, what they're going to do, in my opinion, is they'll do maybe 3 companies first or 2 companies first, and we don't know what the revenue is, but the revenue might be a lot higher than 2 or 3 million a company. It's just too many variables. Very hard to do. All right, let's go up as we go. John, I'm a real investor, not short, not paid, just looking for advice to make a decision. Do you own the stock? If you don't, what decision are you trying to make? I thought people came in to listen, ask questions, have it all. So you are not to have a condescending host belittle viewers that he's trying to get people to invest. Is this cognitively impaired geezer still getting attention? What has he ever been right about? Let me see what that geezer's saying. All right, I'm not going to respond to PCB. I'll see you later, PCB. Thanks for stopping by. you would do better not to belittle your viewers, maybe help those of us who are unsure and tentative. I don't think you're a legitimate viewer. I think you're a short. I understand what accretive is. I can't spell it, but I understand what it is, not trying to create fear. And no, I'm not a short, just a retail trader that has been hurt by penny stocks on YouTube and X. I don't believe you. I think you are a short. Not trying to scare anyone, just discussions. Well, I can't create, John, I cannot create a scenario just out of my head. I believe what's going to happen with Railtown, and if you have been listening, you know I'm been saying this for a long time. But I think Railtown, but this is the thing, John. I don't think you're real. But let me pretend you are. These guys, these four guys, John, founded AIP. This guy and this guy were the first investors in Constellation Software. They put 25 million up, or the majority of it. Constellation Software went from approximately $1 a share to $5,000 a share Canadian by rolling up software companies. When they went public, they started with approximately 140 companies because they had been rolling them up with this capital. And they raised some money in the public offering, but not for Constellation Software. They raised the money for, I think it was TD Bank, so they could exit, take some of their money off the table. So from that point forward, Constellation Software never issued any more shares. Somehow they were able, with their strategy, to roll up additional companies using debt, cash, and bonuses to grow the company from well under $10 a share to $5,000 a share over about 15, 16 years. So those guys decided to found AIP Partners. They brought in 175 companies, all of whom are doing revenue and all of whom are carefully selected. Collectively, they're doing 400 million in revenue. When AIP met the other guys, Corey Brandolini, Marwan Haddad, Dr. Elliott, and they studied the product, they said, man, out of the 175 companies we've already screened as valuable and that we want in our network, we want you to buy us. So John, number one premise I have is that confirms that the conductor products are valuable. Now, I think if you look at Langchain, which does not have AIP partners at all, and is just annualizing at somewhat over 10 million to 15 million, 16 million. They're priced at 1.25 billion. I think Railtown, based on those two pieces of information, and just using, I suppose you got to use the 225 million shares, but I think Railtown very quickly will be worth 1.25 billion, and you're going to see 20, let's call it 225 million shares. That's $5.55. I think that is going to happen very quickly. I can't tell you where the revenue is going to come from, though. Langchain has revenue. It's a startup. Barely has revenue. It's not making a profit either in that article. As of June, it was annualizing between 12 and 16 million. And it is priced at 1.25. I just showed you the comparison, John, and I know you're trying to make a decision, but I showed you the comparison of I think they call it Langtrax versus the conductor product, and Railtown comes out way ahead. So I would argue that Railtown is a better company. Now that's not maybe based on facts, it just is based on the screen that they gave us. I showed it to you. Where is revenue going to come from? My guess is revenue is going to come from revenue deals, just like it is in the case of Langchain. How long is it going to take to show up? Well, if you want to be negative, let's say it takes 6 months. Say it takes 6 months for Railtown to have any revenue at all. That means by the second quarter, if they are able to get some of these other revenue deals tied down, and they get in the range of 15 to 20 million annualized, they have a $5.55 per share value, assuming that multiples don't change. So let's say in the second quarter, at a $5.55 multiple, I don't know, middle of the second quarter, at a $5.55 price, they then go roll up one of the 2 or 3 of the AIP shares. I think they'll do it in an accretive way. I just can't make the numbers work for you because I just don't know the revenues. I just don't know. I don't know the deal on the conceptually, if 100 million of the 120 million spend currently by those 175 companies moves to TELUS, and Railtown revenue splits with that, I don't know. Are they as good as an institutional broker? The worst institutional brokers got was 11%. Call it 10%. That's 10 million just from that. And then if they get a handful of revenue deals, maybe Railtown's at, instead of being at 16 million, maybe Railtown's at 25, 30, 35 million. And then maybe you're talking, instead of 550, you're talking $10 a share when they go to buy AIP. They don't have to rush to buy AIP, John. They don't have to rush. So I guess, even though I attempted it, I would say that it's a false test. I don't think Railtown is going to rush to buy AIP partners below $5 a share, $6, $7, $8 a share. Now, when they do it, the first time they buy at a discount and in an accretive way, you understand the word accretive. Let's say they issue shares, instead of issuing 125 million shares, which is ridiculous. Let's say they only issued 10 million shares or 15 million shares at the $5 level, and that makes the stock solid, let's say at $6 or $7 a share. It gives it a bump. The next deal they do it again, and it gives it another bump. That's how I think it's going to happen. But I can't, it's impossible for me to create a scenario when I don't know what the revenue deal is with TELUS. I don't know the revenue that Railtown's getting on these other deals. I don't know what the status is of, and maybe it doesn't matter, because it's all projections. I don't know the status of how quickly they can move that 120 million over. Yeah, it's just very hard to come up with a scenario, John. So I guess if you need to make a decision, here's your decision. Do you believe that Railtown is going to do revenues between, and again, doesn't have to be right now. They have to project. Can they show a path to 20, 30, 40, 50 million in revenues between now and year end for the next 12 months without acquiring any AIP companies? I think they will be able to do that. I just can't. It's going to come from other revenue deals. It's going to come from the existing revenue deals they've announced. I think it's going to come and be vividly clear from the revenue sharing deal with TELUS, but we don't know what that is yet. And I think it's going to come from cross-selling to the 5,000 end users. All of that, I think, is in place as a projection before they roll up any AIP companies. And I would say, John, if you listened, and I know you're here to make a decision, so you must have listened to it. The interview with Dr. Tom Core, he made it clear. I might have written it down. Okay, this is my notes from Dr. Tom Core and Rebecca's interview. I'll just go through them. I didn't write everything down. So Dr. Tom Core said, we got together as founders of AIP to create a network of AI companies who provide SaaS services, software, with a goal of acquiring some of the best of those companies. He found This is Dr. Tom Core, John. And you can go listen if you're trying to make a decision. You can hear what he said. They found collectively that Conductor, that's Railtown, was, in a word I hate, synergistic with the 184 companies currently in the AI network, the AIP network. So they're going to build out what he's called a rich offering, build out a rich offering. He did mention that they had originally wanted to be a public company and they were attracted to that. So what he said about Railtown is it's a world-class product, and they have a strong IP. When they couple that with 184 affiliates, 125 of whom are Canadian, and 5,000 end users, that creates a great channel to get product out the door. That, I think, is what he said. It's what I wrote down. Most of these companies, the 184, are early stage companies doing 2, 3, 4 million in revenues and growing rapidly, John. So if you're trying to make a decision about that, you might take into account that they're growing rapidly. So they're going to create a suite of products to help the affiliates to sell to the end users. And that suite is based on Conductor. So they're going to sell not only, this is what Dr. Tom Core was trying to make clear, they're not only going to sell to the affiliates, because the affiliates need Conductor and the Conductor agents to create something to sell to their end users. So they're going to sell to the affiliates, but they're also going to be able to cross-sell directly to the end users. But here's the key thing, John, that might help you with your decision. Dr. Tom Core said, we haven't made any decisions yet. But his gut is they will add the AIP network companies. They will start with the companies who are synergistic to the Conductor, to the Railtown offerings. He brought up Constellation Software. So he said, and I'm just reading my notes, he said Railtown and AIP do not have the resources at this stage to act like CSU. So they're going to focus on what Railtown is doing first. So again, they're going to get the revenues up on the Conductor side before they go acquiring AIP and diluting shareholders the way I believe you and your friends are trying to do. I just don't believe you. I'm sorry about that. He also brought up the data centers. This is before the TELUS news. He said, we're working with a late stage of negotiating, which would allow the affiliate business to stay here instead of going to hyperscalers. He basically gave us a clue right there. And that's when I stopped taking notes. So let's go, John, from your point. Let's see if I thought that's your first one. No, here's your first one. John says, with that interview, it sounded as if they are in no hurry to add companies. He said they would be slow and selective. See, your whole thing is to be negative. So I don't trust you at all, John. To me, that says very slow growth. Okay, I believe it says that to you. It's not accurate read of the situation, though. Somehow you're ignoring why he said they're not in a hurry to add companies. I just read it to you, of course. They're going to focus on what Railtown's revenue is first. Obviously, John, they want to see, John, you guys destroyed, for example, Logic. It's one I know. There's other companies out there you've destroyed where the CEO, gullible as he is, says, we're going to roll in $1 billion worth of assets. Well, you start selling the stock down. So those companies that want to come in at, I don't know, 25 cents a share, you've driven the price of the stock down to a penny. They don't want to come in at that deal anymore. And so then the company does one deal just to pay the bills, and it's 2 billion shares, and you've won. And that's what you're trying to get across here, in my judgment, is you're trying to see a way how Railtown is going to have to follow that model. So you just dismiss. I mean, you call me arrogant, which I may be, but you're just dismissing, and I'm supposed to not get upset. You're dismissing that Railtown has any growth on its own at all. Remember, Langchain is valued as a comp to Railtown without AIP, and it's already 1.25 billion, and it has not even done 10 million in revenue yet. It annualizes at 12 to 16 million in June. But you want to leave that off, and so you conclude that means very slow growth. I think you're here as a shill. I apologize for that, but that's what I think. So you said with that interview, it sounded as if they are in no hurry to add companies. True, I think that's true. They don't want to add companies until the stock price is higher, so they don't have to issue a lot of stock to buy those private companies at a discount. They want to create value the way Constellation Software did. They are very savvy, and they're willing to wait. I agree with you. So that's a good news. He said they would be slow and selective. Great. Perfect. I love it. Be slow as Railtown grows its revenues and the stock price goes up. And be selective. Fantastic. To me, that says very slow growth. Well, I understand that you have limited experience, I guess. As they acquire, would not those companies want stock? Of course. Of course. They're going to want stock. But we don't know if it's going to be stock or revenue sharing, or if they're going to set up a separate company. We don't know how it's all going to, it's all negotiation. But of course they're going to want stock. That's what happens. But you guys, John, are not going to be able to get Corey and Marwan to issue billions of shares in desperation to acquire one or two of the AIP companies. That's just not going to happen. So you can put the fear out there. And unfortunately, I cannot create a scenario when I don't know what the revenue deal is, when I don't know what the status of revenue is with Railtown. It's just impossible. All I can tell you is I take great comfort in the fact that Dr. Tom Core said we're going to be selective and we're going to take our time. Why? Because they're going to want the revenues at Railtown to go up. So the value at Railtown is going to go up. So they only have to issue 10 million shares to buy the first 2 or 3 companies. And maybe it's with a bonus. That's not dilutive. You already understand accretive, so I'm not going to spend more explaining it to you. See, now you've already got Steve agreeing with you that it's going to be very slow growth. You guys are effective. You really are effective. Steve, John doesn't know anything. I don't know anything either about the revenue at Railtown. I can go back to the capital research, Steve, that it's over there. It's too far for me to reach. But that guy said that the addressable market for Railtown a year and a half ago was $3 billion. And he based it on 28 or 29 million programmers in the world. And he said that they would get a meaningful penetration, which he put at 3%. And using those numbers from a year and a half ago and a 12 multiple, a 12x multiple, he came up with a target price for Railtown without AIP of $2 US. He, I think, was accurate in his projected shares around 170 million. So that's a pretty fair target from a year and a half ago. But it doesn't account for the acquisition of AIP. So there's 50 million more shares. So it's 225 million shares, fully diluted. Well, what has changed since he wrote that research report, ignoring AIP, just ignore AIP? The multiples have gone wild, and the addressable market is huge, Steve. I don't agree with John at all, and I think he's here to mess with your mind. On the other hand, I don't mind an honest question. I just didn't perceive John's as being honest. It sounds like, Steve, you have the question that growth is going to be slow. I don't see it that way at all. I think they have a bounty of growth. Let's go to the other side. Let's not be negative. I tried to be negative. Let's be positive. There's 128 million. Let's say 100 million goes to TELUS without any roll-ups, and it's a revenue share. But let's say it takes, let's say it takes until the second quarter to show that 100 million in the future to TELUS. I think it's going to be really quick. I think it's just a matter like when you call Verizon and say, hey, I want to go to AT&T. I think it's probably takes a day. But anyway, let's say it's the first or second quarter next year. Well, what would the revenue share be, do you think, on 100 million? Let's say 10%. I really don't know. So Railtown, by the end, let's say the end of the first quarter, Railtown gets 10 million coming in from the revenue share. And then let's say that Railtown brings in other revenue other than the TELUS revenue share. Let's say they get the 5 they've already announced, or 6. Let's say they get a total of a dozen alternative revenue deals by the end of the year, and maybe another 8 by the end of the first. So let's say 20 by the beginning of the second quarter. And what kind of revenue deals do you think they'd focus on? Small ones? Medium-sized ones? Easy to close? Over hard to close? Larger ones? Let's say they get 20 revenue deals by the end of the first quarter, and they average $1 million a year. I think that's small. So they get 20 million from those revenue deals. Where else could Railtown get revenue outside of AIP? I guess that's it. Revenue and the revenue sharing from TELUS. So I think I'm using low numbers, by the way. But let's say they get 30 million, which is double what Langchang is right now. So let's say Railtown gets that, and at double, let me just show you these numbers. I'm saying that they're going to use 100 million. They're going to move 100 million from the network over to TELUS, and I'm just guessing Railtown gets 10%. It's easy math. So that's 10 million from that. And then they get 20 deals by the end of the first quarter, by the end of the first quarter. So they have 20 million in revenue from alternative revenue deals. And that's it. That's it. They don't have anything from AIP. It takes November, December, January, February, March to do that. So April, they're able to tell the world, we've got 30 million in forward revenue and we're growing rapidly. That's double what Langchang is currently doing. Let's assume all the multiples stay the same. So that means the company will have a valuation of $2.5 billion. And we divide that by 350 million shares. No, sorry. No. We divide that by 225 million shares. That's $11 a share, Steve. Now, let's say they $11 a share. Now let's say they buy 3 affiliates with $10 stock. And let's say those affiliates are worth, let's say they're worth 30 million in revenue. So 30 million in revenue times what multiple should I use? 35? 25? They're going to buy it at a discount. Oh, what's a fair number? Let's say they buy it at a multiple of 25x. And if you disagree with me, I don't know what to do. So they pay 750 million in stock to buy those 3 companies, but they do it at $10. So they issued 75 million shares. I still think it's ridiculous. So now you'll have a company. I don't think that's happening, by the way. I think that's very unlikely. But anyway, now you'll have a company with 60 million in revenue. And we're talking the second quarter of next year. 60 million in revenue and growing. With 300 million shares outstanding. So 60 million in revenue and growing. If we use not 225, not 200, not 150, not 100x, but if we use the Lang Chang multiple, 78, let's call it 75, 75x. I mean, it's all loosey-goosey because we don't know anything for real. That's a $4.5 billion valuation. Divided by 300 million shares, that gives a $15 price. And that, in that scenario, that's accretive. That's accretive. And then the stock's worth 15 for the next stock they buy. That's what I think is going to happen. But I have a hard time creating a hypothetical. I really do. But Steve, let me address your idea that it's going to be very slow growth. I believe that Railtown already has revenue. I think they've been working their arse off for the last 9 months. And I would be surprised that Railtown doesn't already have tens of millions of dollars of revenue lined up. The question is how long does it take to not necessarily book it, but be able to tell Wall Street that's coming. We learned today in this presentation that there's 128 million being spent to host AI agents at other data centers. I would imagine all of that's going to come over to TELUS. I just don't know what the revenue deal is. I don't know if I'll ever know. But that's huge. That's all juice. That's all high. I can't imagine what the cost is. What, you hire an accountant? What's the cost? So that's rapid growth, Steve. That's growth that I never thought of. That's growth like we don't have to make anything. We don't have to hire programmers. That's additive growth that is gigantic. So I think there's tens of millions already in the hopper on the Railtown side. And then this revenue sharing is gigantic. It's tens of millions more. I don't know if right away, but as each of these companies grow and as they add additional agents, I think that will at least be equivalent to what Railtown already has ready to go. And then on top of that, they acquire the AIP companies. And, John's not going to trust me on it, but and I'm not sure anyone should trust me on it, but I think people should look at whose interests we are aligned with. You've got guys that have done this before, and this is probably in their lifetime, their last shot at the golden ring, and they're not going to screw it up. And how do they make their wealth? With the exact same shares we have. So John can try to scare people into that it's going to be dilutive. And I suppose it's always possible, one or two transactions, you go, why'd you do that? But in the overall thing, I think they're going to follow the Constellation software model, which was to buy revenue at a discount. And I think they're going to buy growth at a discount. So I don't think it's going to be very slow, Steve. And I'm sorry that you feel that way. I really am, because I've got to do a better job of somehow. It's so hypothetical. But I think Railtown stock price will be $5 in December. And once it's 5 or 6, it could very easily be 10 or 11 or 12, let's say by the end of the year / January. And at those prices, you can start rolling up AIP companies. Remember, those AIP companies want an exit, and they want to get in early too. So they have an incentive to do it because they want to be a part of this. And I think the growth is going to be rapid, not very slow. And I'm sorry, John convinced you otherwise. No, just a question. This is a discussion, yes? I think it's a distraction. D's very positive on Railtown. John, not trying to scare anyone, just questions in a discussion. Well, you chose to focus on when he said he's going to go slowly and be discriminating in a positive way. You chose to focus on that means slow growth, without listening to the rest of it, which is that they're collectively going to focus on Railtown first. So I think that selective presentation on your part did show that you intended to frighten people, but I don't know. John, I understand what accretive is, not trying to create fear. Okay, I'll take you at your word. And no, I'm not a short. Well, okay, I'll take you at your word. Just a retail trader who has been hurt by penny stocks on YouTube and X. Railtown's not a penny stock. Now, it is trading under $1. There's no question about that, John. But it's a Canadian stock, and Canada shares with the UK an acceptance of stocks that trade at low prices. Here in the United States, our cutoff is around $5, $7, $10. But in the UK, in Canada, there's much more of an acceptance of lower price stocks. So that translates to some institutions. It definitely translates into research, and it does translate into brokerage buying. So you immediately present it as a penny stock. This is not a penny stock. You're giving all the clues that with 3 comments, you put in people's minds doubt. So I just don't trust you at all, John. I just don't trust you at all. And how have you been hurt by stocks on YouTube and X? You made the decision, didn't you? So, the reason I'm on YouTube, I don't know how to use Rumble. I don't know how to use X, so I don't use X. I don't know how to do a space call. Busy Brand showed me once, but I forget how to do it. And so I'm on YouTube. But I'm not pushing a penny stock. I'm not promoting a penny stock, John. And I'm not trying to hurt people with a penny stock. In fact, I'm trying to show people that Railtown's a way. It's a way to get away from guys like you. Bob S. says it's a good question, John. Okay, so what part of the question is good? John's gotten Steve thinking that slow. John's gotten Steve agreeing that it's going to be very slow growth. So I've got to work on that. And what's the here's the question. That's a very good question. As they acquire, would those companies want stock? That adds dilution. Yes, no. So Bob says it's a good question. Good question, John. I can't create a hypothetical. I just tried it 3 times, and it's embarrassing, and I don't have enough of the variables, Bob, to create a realistic example. The plan, all I can tell you is what the plan is. The plan is to not issue shares down here to buy AIP companies. They're in no rush, and they have no need to destroy the market cap of their company to hurry in to acquisitions. They're not going to make mistakes. They are not going to rush it, and they're not going to destroy the cap table just to add revenue quickly. Remember, Bob, the issue is not adding revenue. It's not adding revenue today. It's not looking at revenue in the rearview mirror. The issue is defining 2 institutions that there's a path to revenue, and it's growing, and it's recurring, and it's profitable for the next 12 months. So that's going to be the goal of the company, is to put that revenue down. And Bob, I don't agree with you that it's a good question, because John lops off probably the most exciting part of the story. He just lops it off. So I think it's an unfair question. But you think it's a good one. I think Railtown's going to do more than 400 million in revenue. Not by the end of the year. And again, I'm predicting forward. Not by the end of the year, and maybe not by the end of the first quarter. But I think Railtown on its own, and with the revenue sharing deal, and growth in enterprise sales agreements, I think Railtown on its own can get to 400 million forward revenue sometime next year without AIP. So I think it's actually an unfair question, Bob, because if you don't believe that Railtown can do revenue on its own, and therefore the stock price can go up before Railtown is going to acquire AIP revenue, I would suggest I don't want to tell you to get out of the stock, because I think Railtown is going to be a tremendous success. But I would suggest you don't really understand it, nor does John. Unfortunately, I can't create an example because I don't know the revenue numbers at all. I have zero understanding of how much revenue they already have, what revenue they're going to get out of their revenue sharing agreement, uh, what other revenue deals are in the hopper. I don't know any of that. So we just have to wait and find out. But John's assumption, and I guess yours as well, Bob, and I guess Steve now believes that growth is going to be slow. It's just what I'm afraid of. That's why I react so sharply. Um, Everybody's reasonable. I'm the asshole, which I go along with. But everyone's reasonable as they put doubt into your heads so they can get you to sell. And I've just got to do a better job of explaining to you. Look, when MULN, when MMAT, when Torchlight, when Logic, when CRTD, when uh, uh, all these stocks, you're all scarred because John's system works. Get the fear out there, suppress the price, keep suppressing the price. You're going to break up the deal and the price will collapse, or the deal's going to get done like DBMM and there's 3 billion shares outstanding, or like Northwest Bio. It's a brilliant strategy, but it's not going to happen here, Bob. But I guess your question is, why isn't it going to happen? It obviously, John's asked a good question about dilution, because everyone, all the buzzwords out there is dilution is bad. Dilution is not bad if you issue shares to buy revenue growth or to buy a great asset. To only look at one aspect of an acquisition, oh, they're issuing more shares, it's got to be bad. That doesn't take it all in. I would say, Bob and John and Steve, unfortunately, if you cannot accept that Corey and Marwan and the rest of their team and Dr. Tom Core, that they are not going to be able to bring in revenue, which causes their stock price to go up first before they acquire AIP revenue so that it's not destructive to the cap table, it's the wrong stock for you to be in. Because you're not accepting that they have a game plan. Now, that's a different question. If you don't believe they can get that revenue and that the only revenue that's available to them is the AIP partners, I'm not going to convince you otherwise. But I would ask you, if that's the case, why in the acquisition and the creation of Newco, why did Railtown essentially get whatever 78% of the company, and AIP only got 22%? I mean, I think one theory is that gives some shares they can issue to go buy these companies, so it gets to a 50-50. But if AIP is such a better company than Railtown, wouldn't it be the other way around? I just don't see it. I accept that the strategy is to get Railtown's price up before they buy any of the AIP partner companies. I also agree with John, Bob, and I guess Steve, that if Railtown doesn't have any growth, or it's very slow in terms of its conductor deals, that if the strategy is to go forward and just slowly add companies incrementally, that's very slow growth. That's not the strategy, but that's what John has gotten Steve to see. And I don't know, Bob, what is good about the questions that you say. I mean, I accept that it's a good question, but I'm rambling, so I don't know what part of it you want me to answer. John says you would do better not to belittle viewers, maybe help those of us who unsure and tentative in penny stocks. John, I think I tried to point out that I don't trust you. And I get angry when you threaten. All of these people are raw with the money they've lost and the lies that have been told and the promotions that have been told and the complete lack of care for their situations. They're all raw from that. And then you come in and you try to look reasonable. That's why I overreact. And then you go and say it's a penny stock. Railtown is not a penny stock. It is trading for under $1, just like International Harvester once did, just like other big I can't think of any right now, have their collapse and then they recover. There are stocks that trade under $1 that don't fall under that derogatory name penny stock, John. I'm not going to go back through this presentation. I don't belittle my viewers. I do get upset sometimes. I do trust that my viewers are intelligent and they can make allowances. I told you I was hungry and out of energy, and maybe that explains my reaction to you. But I think, John, you're here to cause trouble. John, as long as the company being acquired has a higher earnings per share. What the hell does that mean? That's just nonsensical. Totally nonsensical. No, that's not. It just makes no sense. You can overpay for a company that has higher earnings per share compared to you. It's just, it doesn't mean anything what you just wrote. The key is in these companies, the AI space right now, the metric right now is revenue, annual recurring revenue. Yes, some of them, like Railtown, are going to have extremely strong earnings. I would argue if Railtown gets to 100 million in revenue, John, and this should scare you and your friends, I bet Railtown is bringing in 50 million a year in cash flow, and most of it's earnings. That becomes a juggernaut. Then they have cash to go acquire those private companies. That's what I see happening. But it's going to take a little while. But the analysts and the institutions are not going to have a problem seeing it, John, because they're not going to ask idiotic. They're not going to make really ad hominem or not for nothing statements as long as the company being acquired has an higher EPS, it just shows you're not serious. You're not a serious investor, John. I wish the hell I hadn't started answering your questions. All right, Dirty Randy, finally some sanity. John, in my humble opinion, I think you are wrong. I expect rapid growth by next year in Q1. I agree with Dirty Randy. Dirty Randy, they don't need to roll up the companies in order to grow revenues. I agree with that. They all are going to use conductor is what I think. And that'll be recurring revenues. And I would add, Dirty, that how about this scenario, Dirty? By first quarter, they grow their revenues on the conductor side, right? And they maybe roll up one or two of the companies to show how it works. If they can show how that strategy of roll-up works, what's to stop a company like a Microsoft, for example, saying, you know what, I want to buy the whole thing. You don't need to roll up any more of those companies. We'll take care of that with Microsoft stock. I just want to buy this. I love that. We love that idea, and we love conductor, and we need this agent, and we love that you're embedded. Of course, the problem is Microsoft is US, so maybe it'll be Constellation Software. But Dirty Randy, my point is, they don't have to roll up all those companies to prove it to institutions or prove it to an acquirer. They just have to show that it's going to work, because the acquirer can finish out the run. Anyway, John, you can continue to speak down to me and others who don't ask questions to get a better understanding. I'm an adult and have a thick skin. Thank you for your time. I'm sure you have a thick skin. I'm sure you do. If you're an adult, why don't you take time and think out the questions you asked, and the impact it's going to have on an audience. John, please. The hardest thing is going to be for me when this stock goes to 3 or 7. The hardest, some people will sell. I can't change that. But the hardest thing is going to be that people hang on. This is not a penny stock. This is not a manipulated stock. This is not a hype stock. This is not a pump and dump. And every time you try to make it analogous to that, it pisses me off. But I'm glad you're an adult and you have a thick skin. Therefore, you're not going to be too hurt by my response to you. Dirty Randy misunderstood. I think John was talking to me. John says, Dirty Randy, I don't see your comments other than on his screen. Dirty Randy says, I thought you were responding to me. Raw Dog is, you may need to select all messages versus top messages. John says, no, Dirty Randy, I was speaking to William. John said, I thought people came here for an argument. No, 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 no. This is abuse. Arguments are just down the hall. I thought people came here to listen, ask questions, have adult conversation with the host, not to have a condescending host belittle viewers that he is trying to get people to invest. John, I've seen this argument before. To me, you're very clearly one of the shills. John, I am a retail investor, not a short, not paid just looking for advice and make a decision. What? Are you really looking for advice? Sounds like you've already made your decision, John. Raw Dog, I think I already answered this. I do think John's question is valid. A few of my buddies and I were asking the same question to one another. Last time, Raw Dog, I tried to answer that. I tried to make an example, and I just find it impossible because I have to guess at too many of the variables. But here's how, Raw Dog, I think the stock is going to trade. It hasn't happened yet because I think there are a certain set of investors, large investors, who may have to wait until the AIP deal is finalized. And the fact is, it's not finalized yet. I don't see any problem with it, but it's not finalized. That's one. Two, the TELUS transaction, even though you don't, not you, but John doesn't understand it, I don't fully understand it. I'm not belittling him. I think it's a huge magnitude, what we know about it. And so there may be some combination of investors wanting to understand what's going on with TELUS, I don't think necessarily that investments are held up for a further TELUS explanation, but they might be. So you've got AIP, you've got TELUS, and for some reason, some of these bigger investors are on the sideline. I don't know why. It might be because the stock's under $1. My guess is it's more to do with that AIP deal needs to be completed. Anyway, once those bigger investors come in, Raw Dog, which I think isn't going to be this week, obviously, but I think it could be next week. It could start. I think Railtown is going to go to an equivalent valuation with Lang Chain. And that's 1.25. And if you divide it by, that's about $5.60 a share. I think that's going to be the first move in the stock, is to achieve an equivalent price on a fully diluted basis with Lang Chain, all other things being equal. And I think that'll happen within the next 2 to 6 weeks. I do not believe, Raw Dog, that Railtown will enter into any agreement to acquire partnership AIP companies until then, and maybe not even then. It's all in negotiation. But I do not believe they will enter into a dilutive transaction. Now, the first one, every negotiation is give and take. If the first deal is a lot of revenue and it's growing quickly, and as Dr. Core calls it, it's synergistic, well, maybe you do a deal that's a little aggressive. But Raw Dog, you're not going to see issuance of shares to buy an AIP company before Railtown achieves somewhat of an equivalency to the Lang Chain valuation, in my judgment. So that's $5 or $6. Now, if during that time, Raw Dog, research comes out, maybe more than one piece of research comes out, if a strategic uh, uh, financing, like I don't know anybody up in Canada, but let's say Bill Gates's foundation came in and bought 5% of the company, and that was announced. That's going to have an impact. That could happen. All you need here is one of the larger institutions to say, we want to own 3, 4, 5% of this company. And there's not a lot of stock available, Raw Dog. The only stock that's available is what the counterfeiters sell every single day. And I think that'll stop. Once the stock's $5 or $6, if institutional investors come in, which I think they will, that stock's going to come off the market, and I think the stock's going to be $11 or $12 in a heartbeat. And then imagine that. Each time they issue shares from, let's say, from 5 or 6, and then from 10, and each time, because they're going to do it carefully, because they're going to do it at a discount, because they're going to do it accretively, each time that locks in a higher valuation, and then in comes the buying. And the next time they do it, it's from a higher stock price, and they do it again with the skills they have. And then the stock price is higher. What you're going to find, Raw Dog, is there's not, as the stock price goes up, there's not going to be a lot of stock available to buy. So the hard part's getting it going. And, you know, I react protectively, I think, and maybe I react like an asshole. But I'm not convinced John didn't intentionally put in Steve's mind that it's going to be very slow growth, or put in Bob's mind that dilution is the question to ask. I don't have a better answer because I don't know. I'm not in the boardroom. I don't know what the revenue stream is. I don't know what the revenue deal is with Railtown. I don't know what the first, he mentions 3 to 5 companies. I'm not in the negotiation with those companies. Maybe they're going to give stock. Maybe they're going to give stock and some funding. Maybe they're going to give stock and a bonus. I don't know. We just don't know. Dirty Randy. Guys, let's chill. We could be fucked in stocks that swing 50% a day. We aren't. Rail is going to be big. The question is when. Do we see revenues in the next couple of months? I think yes. I agree with that, Randy. Dirty Randy, sorry. I just think there's one aspect that's going to be different once we can get away from these punishers. We'll see, I could be wrong. But I think that this stock, because there's knowledgeable buyers and maybe knowledgeable sellers, I don't know, but there's knowledge. I think there's going to be real price discovery. It hasn't started yet, but I think it will start. And I think there's a term called discounting. I think the good news, and what I mean is revenues, are going to be discounted. They're going to be taken from the forward months and brought forward to today. They're going to be brought into the value calculation today. And that's going to happen on family office desks, on institutional desks, on research reporters' desks, on up in Canada anyway, on the sales forces of some of these firms, whether it's institutional or retail. I think they're going to start saying, you know what, that revenue, like Dirty Randy, you're saying, it's going to show up in 2 months or 3 months, but we can factor that into the stock of the price of the stock today. It's called discounting. And none of these shares that we've been trading in over the last 2 or 3 years I've ever seen that, because there isn't a real market. The difference here is there is going to be research. There's going to be internal research. There's going to be performance. And inside of some of those funds, there are trading desks. And I think up in Canada, even though shorts are very active up there, I think there are real, I don't know if there's real trading desks the way they used to be. But, and I'm not sure there's real market makers. But I think there's going to be real price discovery in Canada for this stock. It just hasn't started yet. So that's all I'm saying is we'll see. This is November. I don't know, Randy, Dirty Randy. It might just be clarification of revenue deals they already have. But I bet we start seeing revenue before the end of November. I'm not saying it's going to be booked. I'm saying projected. I think. I don't know. But you're right. It's better to plan on a couple of months. I think you're right. That's Dirty Randy. I would be buying the frack out of Railtown down here at these prices. Unfortunately, I'm waiting on some cash to come through. I bet we are over 60 cents this month, in my opinion. But that's 50%. Yeah, from here, yeah. Raw Dog 34A. I have a shit ton of investment. I am worried. No. Am I worried? I see. I have a shit ton invested. I didn't know that. I don't think you're on my list, but whatever. Am I worried? No. I'm waiting for the big payout. Not sure why there's a need to get excited. I appreciate your explanation. Just so you are aware, there are many people who don't have your experience. Well, they're lucky, I guess. I guess they're lucky. I'm glad, Raw Dog, you have a lot invested. It's your decision, but I'm glad you do. I think this investment has a chance to pull everyone here into a whole new category of investor. I don't think you need a lot of stock for that to happen. I think 10,000 shares could be worth $500,000 with the right circumstances, in the right amount of time. And I don't think that's far-fetched. So that means 5,000 shares could be, frankly, 5,000 shares could be worth that much. It's just more of a stretch on the prices. So I think, Raw Dog, you're going to be very fortunate, and I think you're going to be happy with your investment. And maybe you can look past the fact that I get upset sometimes. I react to the gamemanship of the shills because it has an impact on investors. Of course, me getting upset isn't the most effective way of getting my message across. So, but I haven't eaten. I had to get anyway. I'm not going to make excuses. Dirty Randy, William, who gives a bleep what people say? All they have to do is look at Corey's track record and do some digging. I have, and I think we are golden. I agree, Dirty. I agree. The combination, it feels like, Dirty, that the bigger buyers that I kind of expected to come in, although it's under $1, maybe they wouldn't come in there. But it feels like there's a delay in their ability to come in. And all I can think is it's that AIP deal. Maybe they have to wait, like a Canaccord Genuity. Maybe they have to wait until that deal is closed. Then, and maybe they're working on a financing for all I know. But then they can resign their mandate and they can start talking to their sales force. I don't know. It's weird that buying hasn't shown up in Canada, and I can only think. Obviously, retail is spent. A lot of us, like yourself, like me, I'd if I had 25 grand, 50 grand, 100 grand, I'd probably pay 3 months rent, pay 3 months groceries, and buy 5 or 6 books, and make sure my electric bill's paid, and etc. And then put the rest in Railtown. I think tomorrow is the X date for the meeting. Maybe we'll see some buying tomorrow. I've been impressed, Dirty, with after that AIP deal had its deadline of last Friday. Monday, we had a great interview with Rebecca and Dr. Tom Core. Tuesday, out of the blue, we had a revenue deal, which I admit it's hard to understand. And maybe that's why I didn't give any bang for the buck. But to me, that's a massive deal. And then yesterday / this morning, we had this corporate presentation come out, which I think is fantastic. I think it's an excellent job. I'd love Corey to present it instead of me. I don't know what the hell I'm talking about. So we went from a long period of quiescence to basically 3 good things in sort of 3.5 days. Maybe something will happen tomorrow. Who knows? But I'm excited to see what comes next. I think finally the dam is broken, and I couldn't disagree more with Steve and John. I think the growth is going to be rapid, explosive. I think it's going to be visible, and it's going to catch people off guard. And then the AIP comes in. But remember, Dirty Randy, according to what we just read in the whatever the hell this thing's called, investor presentation, November 2025, they have a revenue deal with TELUS. And it's predicated, part of it's predicated here's their compute partnership. I don't know what that means. I'd love to know. But for someone to say that growth is going to be slow, I don't see how. That's a quantum leap. Who knew about TELUS? That's gigantic. That goes from, hey, we're going to go pick a deal here or pick a deal there. They have a compute partnership with TELUS and their brand new TELUS AI Factory data center. I think that implies gigantic growth. I want to find that one. See, they admit here that the AIP transaction is going to close in the fourth quarter. And maybe some of the buying has to wait for that. So the shorts just sell and punish, and they bring up these same old fears. I understand it. But the AIP has a proven $400 million in revenue. It's hard to find the, but right there, shared compute revenue, right there. I think that's going to lead to huge revenue growth. I don't see how that's slow. I just don't think maybe John was thinking, and I shouldn't have gotten upset with him, but see number 6 here? Do you see number 6? Platform capacity. Opportunity to move acquired companies and non-acquired affiliates to a common lower cost platform. That's obviously TELUS. Those affiliates currently spend $120 million per year with various hyperscalers. When that revenue comes on the books, whatever the shared compute revenue deal is, that's going to be huge growth. I don't know. I don't think it's going to be slow. And if people expect the company to act in desperation and act foolishly to issue shares down here just for the sake of issuing shares to add revenue from AIP, I don't see that happening. That revenue's there. It'll be there in 3 months. It'll be there in 6 months. The key is to get the share price up first. So anyway, John, let's see what John says out of fairness. I'm not trying to bring in doubt. I don't just sign my name on a loan without having it explained, ask questions and understand it, nor should I invest blindly without having a clear picture. See, again, this is just, you're talking to the entire audience as if they're investing blindly. They're not, John. Unfortunately, I cannot answer I can't come up with an example to prove to you that on a per share dollar basis, that as they acquire AIP, it's going to be non-dilutive. In fact, it's going to be accretive. I tried to, but simply because I don't know the revenues. That bottom line, I just simply don't know the revenues. They do. So I have to believe that they're not going to do something stupid. But here you go. You're trying to get everyone to think they're investing blindly, and you're asking the intelligent aha questions. I have spent all of June, July, August, September, October, and now into November, daily, trying to inform people the best I can. And sometimes I don't handle it well, I'll admit that. But I think I've spent anywhere from, a few hours to as much as 13, 14 hours a day doing this. And so no one here is investing blindly, John. And you've shown up before. You're not blind. You are here to do what you say you're not. So I'm going to move on. What do you need for your clear picture? They are going to issue shares to acquire, to roll up the AIP company. They already issued 50 million shares to acquire AIP partners. To you, that's dilutive. To me, it's massively accretive, potentially, as long as they keep their sanity. Especially when you add in this. We don't know what the deal is. We know once it starts, it's going to just grow and grow and grow. And to, I don't know, issue $20 million of stock or whatever it is, 25 million Canadian, I think, to buy that revenue stream, it's pretty, it's not dilutive. So I'm glad you're not investing blindly, John. And, just keep up the doubt and the fear and the uncertainty. I'll try not to react to it. Raw Dog, I don't have your fund money to just throw around. Sorry. Raw Dog, for the record, I don't come on this feed to hear Dirty Randy recommendation. Me and many others bought our shares based on Williams' perspective and experience. Again, it's a valid effing question. Yeah, it is a valid question if it's just asked without the spin, Raw Dog. And I think that's what I was reacting to. I think it's a valid question to ask, well, wait a minute, how are they going to acquire the AIP companies without destroying the cap table? I think that is a valid question. I think I've answered it before. And maybe what I'll try to do tonight or tomorrow is come up with a step-by-step example, because I couldn't do it on the fly. But I think, Raw Dog, you either accept it or you don't, which is the plan. It just is a sensible plan. These guys are sensible. AI Partnerships did not agree to have Railtown buy them because they have a bad product or because they had little prospect of revenue. I think it's the exact opposite, Raw Dog. I think the AIP people, I've talked about the logic dilemma. And I guess what I'll do for tomorrow, I'll pull up the Logic news releases. But Logic came out, they were a shell. Logic came out and said they were going to have 7, to my memory, maybe 8 companies roll in to the shell worth $1 billion. And with phone calls and with texts, I think, emails, I said, well, you're going to have to negotiate with all of those at the same time. Otherwise, it's not going to work. Well, it didn't work. The first company came in and took 95% of the stock. So the rest of the companies said, nah, not interested. That would be the question I'd have if I were AIP Partners with a stock. I don't know if it were trading on its own right now. The shorts would have destroyed it by now. So they would have the logic problem. So I think one of the reasons AIP asked Railtown to buy them is they can see that Railtown's going to have revenues and Railtown is going to have a high stock price. So that then you can go negotiate good deals with the first set of roll-up candidates. What Constellation Software did, I don't know the exact. I'd love to hear it from John Ruffalo, but they obviously needed 25 million and probably stock to get the first 140 some companies rolled up. They did it all at a discount. Once they had that, they went public, which again was to get, I think, TD Bank out. They wanted to exit some of their position or all of it. But from that time onward, they didn't issue any more stock. And I think that kind of approach, whether or not it starts out that way, is exactly what these guys intend to do. So either you accept, and what upsets me about how John, I don't think it's a fair question. He left out the value proposition of Conductor and just leaps to that it's going to be dilutive at these prices. I actually think it's an insulting question, and I think I responded in that way. But Raw Dog, you just have to accept, for now anyway, because we don't have any other evidence, you have to accept that Railtown is going, let's just use the name, Corey is going to make sure his stock price is up before Dr. Tom Core and Corey negotiate to buy the first AIP company. Why, you have to ask yourself, would they dilute their shares when they own almost 40% of the shares of the company? Why would they do it that way? They've done this before. They've been bankers before. They've been software engineers. They've sold companies before. They're not going to do it the way John tried to scare everyone. Dirty Randy, wow, I was trying to be cool. Thought we were giving opinions and feedback, Raw Dog, unfortunately. Unfortunately, your mama. Dirty Randy, William, the 13th Avenue boys from Borough Park have infiltrated your YouTube. We must be close. That's probably the most prescient or the most observant comment of the day, Dirty Randy. Wow, okay, thanks for your time. Sorry, I don't buy blindly. I will go do some more duty. I hope your channel does well. I don't. Thank you for your let's see if he's gone. Let's see if John's gone. I guess John's gone. That means I've answered all his questions. And we don't have to talk to him again. Ward Richardson, William, the other day somebody had a comment here about Railtown. Press release said something about Railtown does not want to be bought out by a hyperscaler companies. That was mentioned 3 times. Is that true? No. What I think that was a reference. I might be remembering something you're not talking about, but what I think that was a reference to the sovereignty of the Canada AI. So I think the thought was that they wouldn't want to be bought by, say, a Microsoft or I don't know, what's another hyperscaler, Oracle or something. But I don't think the press release said that at all. I actually get that my feedback, admittedly not directly, but maybe by osmosis, I guess. My feedback is it's 2 things, Ward. One is I'm not sure the company's going to be able to control what kind of offers they get. It is an arms race out there. And despite the fear John's trying to put in, AIP doesn't really enter into the arms race. I think it's a brilliant acquisition. The arms race part is Conductor and their 5 pieces are first to market, best in class, battle tested, ready to go. And they solve a real problem in a $300 billion market. So if Railtown, I had a neighbor that always would say about things, it pops. Oh, that painting, it really pops. Or, oh, that chair, it pops. Or, she always thought that was right. Well, if Railtown pops, I think you could see unsolicited buyout offers. And that'll be interesting if that happens. There is an arms race for first mover companies. But if they can control it, I'm trying to think who would block it, Ward. Let's say the first buyout offer comes from Constellation Software, and let's say it's early in the game. So, and their style is to buy at a discount. So say they come in at, I'm making it up, $45 a share of Constellation stock. I don't think the company would accept that, but I might be wrong in my analysis. But I'm pretty sure if a company like Microsoft or a company like NVIDIA or even Apple saw that, they'd say, hell no, we want it. We're willing to pay 75. And then, if you get a 2 or 3 way bidding, next thing you know, maybe it's 105 or 125. And let's say the winning bidder is Microsoft. Well, if you're Corey and Marwan and everybody else and Dr. Tom Kaur, are you going to turn down $125 worth of Microsoft stock when the next best offer maybe is $105 worth of Constellation Software? I mean, maybe you have other metrics like which stock you'd rather own. But I don't think so. I don't think it's realistic that the company is going to take hyperscalers out of the bidding war. I just don't think so. I don't think so. And I think it'll resolve itself. I think the most likely buyer, if they want to stay in Canada, is Constellation Software. Oddly, I think TELUS is too small. If TELUS were to buy them out, I think it'd be early in the game and we'd get a low price. But maybe we could move on. Will Dr. Tom Core be on the board? Let me show you what I saw. Let me show you what I saw. Here's key people. And Mike Norbrega and John Ruffalo are both advisory board members, which is different than being on the board. But then they had it here for Dr. Tom Core. And you can see it right here. It says right there, Dr. Tom Core, board member, AIP founder. So Dr. Tom Core is going to be on the board of Railtown. So is, let me see if these other names are. Corey Brandolini is a board member. Marwan Haddad is a board member. Dr. Tom Core is a board member. And Pat Horgan is a board member. So those are at least 4 board members, 2 of whom are from AIP. The other guys are advisory board members, and I would guess possibly, Ward, that has something to do with conflict of interests, I would guess, or just not wanting to be on the board and having some of your field of play limited, maybe, I don't know. Account settings. Railtown partnerships with Uniserv Communication Corp mentioned shared compute revenue streams. Yeah, it did. It also talked about 3,000 companies, and I wonder if they would move their hosting to TELUS as well. But anyway, account settings, what's exciting about shared revenue streams is how hard is that once you got it done? What's the cost of goods sold, so to speak? It's next to nothing. These are huge avenues of growth and revenue and margin. I read somewhere that the founders, directors, employees own 38% of current shares. I think dilution is highly unlikely. That's where you read it. That's where you read it. It's in today's, it might be otherwheres, but it says founders, directors, employees, and consultants own 38% of current shares. It's an art, not a science, buying companies. So let's just see what happens. I agree with you, account settings. I don't think they're going to dilute it. Donna, good night, everybody. Dirty Randy, I'll go to war with you any day. Probably kick my ass. You don't know me, but I'm around. Well, I appreciate, Dirty, that you came on and told us to cool off, because I got testy, but I really don't think John meant well. And I don't know. Maybe I'm wrong. Maybe he's a great guy, but I agree with Raw Dog. If you want to ask the question, how are they going to buy companies without diluting the stock? That's different than saying, anyway, I don't want to go back over it. It's just choice of words and intent. Red Pepperoni, I just placed an order for 5,000 more. Just catching up with your call today. You're up in Canada. Are you shooting meese? You're shooting meese. Well, I'd like to go to Canada for the annual meeting. That's what I'd like. I like Canada. I've been there. I've been to Montreal, and I've been to Toronto, and I've been to Vancouver. It'd be fun to go to Quisemini. Well, that's great, everybody. I'm sorry that I should have just turned it off at 4 o'clock, but I'll try to have a better answer on dilution with an example. I just don't know how to do it. If you don't trust the belief or statement that the company's going to let the stock get to higher prices before they issue shares, it's tough to argue with that, because once you assume they'll issue shares down in these lower numbers, that's that logic trap. And it's just the trap that the corrupt markets get CEOs in. And my contention is Railtown is just not one of those companies. So, but if you don't, I'll try to come up with a better answer for Raw Dog, and for there was somebody else that joined in, maybe Steve, I can't remember. I'll try. I can't promise it. But anyway, I apologize for getting upset. I do appreciate that everyone was here, and I think this is just absolutely terrific set of knowledge that we've gotten this week. I thought the interview was fantastic. I think this corporate presentation is amazing, and that TELUS news, I mean, frankly, who's heard of Uniserve? But then again, who's heard of TELUS? I know. But it's pretty powerful. It's pretty powerful. So anyway, peace to everyone, and we'll talk tomorrow, I'm sure.